Yeah, I think we can.
All right. Hi, everyone. Thank you all for joining us in this session on Coming Together in Crisis, Challenges and Opportunities. Presenting partner Stride Ventures in association with AWS and Your Story. For people joining us for the first time, I'd like to mention a few quick pointers for this setup that you're using. You can use the chat feature to let us know if you're facing any issues whatsoever, technical, audio, video, anything, and the moderators will connect with you and immediately sort that out. If you have any questions, you can use the Q&A panel on the bottom to post any questions that you have. You can also upvote any questions you want answers to so that we take it up on a priority basis. Due to the limited time, not all questions may get answered live. Rest assured, we will do our best to answer as many questions as possible. Having said that, it's my absolute pleasure to welcome Mr. Ishpreet Singh Gandhi, founder and managing partner, Stride Ventures, to address the gathering.
Thank you so much. Good morning, everyone. Thanks for joining in to our webinar, Coming Together in Crisis. Trust all of you are keeping safe and maintaining social distancing in this unprecedented times which we are observing. Though we have been closely watching the events, how it is unfolding, it's imperative to understand how it impacts the most nascent sector, the startups in India. They are changing the way we behave, spend, consume. But overall, I think we've not been observing the real challenges or the opportunities which they might go through in the next 2 to 3 quarters or 4 quarters. About Stride, we are a SEBI-registered venture debt fund which came in being last year. It has a target corpus of 500 crores, and we have been planning and deploying the funds across early stage and mid stage companies for the working capital requirements up to 18 months. We also partner very closely with the banks in order to do co-lending structures. Basically, the intent is to fund the working capital scenarios in terms of receivables, inventory issues, non-fund based requirements. And we believe that there's a significant value add which is required in the system. Post this, we see a lot of unfolding of things happening, and we truly believe that there will be a lot of requirement of debt in the ecosystem. Basically, my background, I've been an ex-banker with a experience across SME, commercial and corporate banking across foreign and Indian banks. My last assignment was taking care of the MNC corporate business for IDFC and building venture debt in terms of supporting companies which are backed by startups for working capital, which we have been doing for 3-4 years now. So we have 2 sessions lined up for you today. We have a VC roundup, which is followed by a founders roundup. At the end of each session, we'll have 15 minutes Q&A, where we'll take up questions submitted by the attendees. Without further ado, let's start with the first session of the day, which is VC roundup. I'll like to quickly introduce the panel to you. We have Ashish Fafadia from partner at Bloom Ventures, Abhishek Gupta, who's the managing partner, TV Ventures at Times Internet, Karan Mola, who's the partner and executive director at Charate Ventures, Siddharth Pai, who's the founding and managing partner in 314 Capital. Basically, the common thing between all of them are they are amongst the top early stage venture funds available in India. All of these members have spent last 8 to 10 years in terms of leading the investments across various sectors. And basically, it's best to get the view on this. Thanks for joining in and sharing your thoughts. So let's start with Ashish. Do you want to quickly introduce yourself and we'll go around?
Sure. Thanks, Ishpreet. Hi, good morning, everyone. I'm part of the Bloom Ventures leadership team, and we are an early stage tech fund. We invest in 3 Series A businesses, and over the last close to 10 years, we have invested in over 100 companies. Some of the notable ones being businesses like Grey Orange Robotics and Unacademy. We just recently closed our last fund.
Great. Abhishek, do you want to go next?
Sure. Hi, everyone. This is Abhishek. I invest on behalf of Times Internet, which is a digital arm of the Bennett Coleman Group, which publishes Times of India, Economic Times, and other media properties. We have been investing for the last 8 to 7 years in tech companies. Some of you that probably you have been using like InShots and Byju's, etc. We've overall invested in 74 companies. We started with T Labs as an accelerator, now do seed and Series A investments for the last 2 to 3 years.
How about Karan? Karan,
Yeah, no, thanks a lot, Ishpreet, and thanks to you guys and your story, AWS, for bringing this together. Hi, everyone. I'm Karan. Part of the leadership team at Chirate Ventures. For some of you who've known us in our previous avatar as IDG Ventures, we've been investing in India through our fund since 2007. We've invested in about 85 companies, largely invest at the venture stage, so Series A and Series B. On occasion, we go earlier. On occasion, we also go later. Our focus is all around technology and tech-enabled startups. Some of the better-known companies from a consumer standpoint would be Myntra, Flipkart, where we were early, FirstCry, Lenskart, Policy Bazaar, and then more recently companies like CureFit, Bounce, Nestaway, Go Mechanic, and we do everything from consumer to healthcare to enterprise, fintech, and beyond. So, thanks.
yes, Siddharth, over to you.
Perfect. Thanks for speak. So thank you everyone for actually taking your time out during this tumultuous time. So I'm Siddharth Pai. I'm the founding partner and CFO of 314 Capital. We're an early stage venture capital fund based in Bangalore, currently with an AUM of just north of 100 million. We invest into technology and technology-enabled companies. Some of our best bets include Licious, Darwinbox, Pocket Aces, Yulu, amongst others. And it's a pleasure to be here on this panel with everyone else.
Thanks so much, everyone. Let's straight away go to the questions. Karan, starting with you. We've been hearing a lot in terms of global recession and things which are moving towards that. We've heard something about US, UK, and large economies, developed economies going into recession. Karan, your thoughts there, that how it possibly can impact India, and how do you see overall macro scenarios for venture capital in India amidst all of this?
Sure. Pretty loaded question to start, but happy to take a stab at it. So look, I think if we all and we keep hearing about news every day, but I think maybe just to lay the groundwork, and I'm sure others will chime in. I think it's important to understand, and this is the first thing for us that I think we took time to really understand is, this is the first time in a very long time there has been a crisis of sorts, which started in what we called the real economy and not the financial economy. And that has very, very deep repercussions, both in the short term, as well as it has a potential to fundamentally change how we operate as a society, as an economy globally for years to come. Most of the crises in the past 30 years were through financial meltdowns, which then permeated to the real world. This is the opposite. So I think from what everybody has seen and heard, we're still beginning to come to grips with what will be the longer term repercussions. In the shorter term, if you look at a lot of the developed economies, and let's include China in that for a minute, each of them is going through contraction, depending on which report you read, anywhere from -1 to -20% over the next couple of quarters. So the economic activity will actually contract. Now, that has a large effect on 2 or 3 things. One is on global supply chains, because of the lockdown right now, but even when the lockdown opens up in the countries where it's imposed, things will not move as quickly as they were before. It'll take time for activity to pick up. Number one. Number two, if you look at consumer sentiment, everywhere it's going to be bearish for a period of time. Again, that will depend on the lockdown and the impending economic activity. The third is around capital flows. In every such crisis, capital flows goes to stable assets. So gold prices, and people largely sitting on cash. We've already seen how public markets have gotten impacted in India. That's true for everybody else. So the level of uncertainty and the amount of questions that people have in terms of when the light is at the end of the tunnel is the biggest thing. And I think I'm old enough to have been part of the last 2 big ones. And I started my career when the dot-com bust was about to see the uptick, as well as 2008. So everybody wonders where the light at the end of the tunnel is. And very few people take the first steps. And then you have a massive amount of liquidity that flows through, and the 90% of the people that are following come. So you'll probably see that in some shape or form. I think in this case, the recovery may just take longer, not because of liquidity, but just because of the uncertainty around the health concerns, which will go long after lockdowns are lifted. So I think we could spend the whole webinar on this, but I'll leave it to here. I think it'd be good to get perspectives from others.
Yeah. So Siddharth, on the same lines, actually, Gudi mentioned about that actually it would have an impact on cash flows, right? But just speaking on these lines, especially the yesterday's data of unemployment of US, and very few people understand how it possibly can impact the Indian ecosystem as well. So do you want to just take your probably just 2 minutes on this? That what do you believe?
Sure, happy to. So see, what happens is the private markets, most people think the private markets are actually immune to what happens in the public sphere, but in fact, both of them are actually extremely intertwined. Now, if you look at anyone who's an asset allocator, be it a large family office, a pension fund, an insurance company, any of the long-term investors, all of them don't actually look at particular stock picking, they actually look at asset allocation. But the bulk of their assets always remains in the listed space, either in bonds, debt instruments, funds, or in equities. And now what's actually happened of late is we've actually seen about the past 6 years of wealth across the entire world be wiped out in the span of about 14 days. This in turn is going to have long-term ramifications on everyone. Cash has actually become constrained severely across the entire ecosystem for the asset allocators, but simultaneously you're seeing a large amount of liquidity flowing into the financial ecosystem through the central banks, into the main banks, etc. So this sort of dichotomy that's actually come in as now is going to take quite some time in order for it to normalize. And the biggest ramification for the Indian startup ecosystem is the fact that the three largest sources of capital for India actually comes from the US, it comes from Singapore, and it comes from China. Japan also is now slowly picking up over time. The US has been extremely badly hit. The unemployment figures you mentioned is true. There's a $2 trillion stimulus package that they have, and there's rumors that it's actually going to be increased over time to make sure that they actually do survive. It's also an election year in the US, so this will have broader ramifications therein. What we've seen in Singapore also went through a lockdown. Singapore's slowly coming out. Singapore's getting back on its feet. Singapore's imports have been severely impaired, and as a small country, they actually rely heavily on imports in order to even survive. So they're actually looking more inward than outward as of now. China's slowly bouncing back. All the metrics and all actually rising up, but it'll take some time before they start expanding throughout the entire world. So Indian startups are going to face a liquidity crisis over a short span of time. Even the largest Indian investors as well, because of the fact the stock market actually has gone down to 2014 levels, if I'm not mistaken, as of now. It's going to take quite some time until people want to look at a long-term asset like venture capital financing or startups. But that being said, when this too shall actually pass, when all this does subside over time, we may see this happen. We may see this happen by the end of this year. As Karan also mentioned, large amount of liquidity is going to flow through. And what everyone's going to realize is from an asset allocation and diversification perspective, venture capital is a very attractive, venture capital startups a very attractive asset class because they have a much longer time duration. They're not going to go through the same vagaries as what's happening in the listed markets as well. And we are actually going to see a lot more money actually coming into startups over the next couple of years. That being said, the old model of raise and raise, basically raise as much money as possible, burn all that money as possible, and then go raise again. That model is going to fall extremely out of favor. All startups are now going to be questioned on their path to profitability and becoming sustainable cash flow generating businesses. So I think this is a new paradigm that COVID is actually going to inhabit for all of us. I'd love to hear the thoughts of my fellow panelists on this.
Yeah. Ashish, I would like to bring you in here since you've been with Bloom, one of the leading early stage funds for now 9-10 years, right? And you take care of exits. You have been doing active fundraising in the fourth fund. Basically, Siddharth mentioned that the public markets are almost down to the 2014 levels. And all of us are domestic funds and we have a strong bit of domestic LPs, right? So I just wanted to understand that how it affects the fundraising for a first-time fund manager or otherwise normally as well for funds who've been trying to raise money. And very important to understand for the audience who are the founders that how it impacts their fundraising further if a venture fund seeing the levels would face a hit, seeing that the investors, LPs might move towards public market instruments as well.
Sure. So in as much as these sound like two different parts of the puzzle, let me try and acknowledge that this is fairly connected. the question around the ability of the funds to raise money, and the question about how does it impact the founders is actually a top-down and a bottom. So from a bottom-up perspective, Ishpreet, I think not only first-time funds, we consider ourselves also fairly blessed that the fundraise for the third fund that we just closed got done at the right time. There's no sweat in admitting in public that we can't find ourselves lucky. So it is going to be a challenge, regardless of whether you are a first-time fund manager or you have a bunch of other funds prior, because everybody today is definitely asking a very few fundamental questions. And overarching challenge is that cash is the king is a positive statement, but cash is a constraint is a big concerning statement. So when cash has become a constraint in today's day and age, everybody is running towards just protectionism and survival. In a scenario like that, everybody would definitely want to be a little more careful in making investment decisions for a long-term nature. While unfortunate, because venture investing is a 10-year game, so unless one feels that it is going to be continually bad for the next 3, 4, 5 years, then those concerns one can say are legit and one can stay away. But that's how sentiment works. And unfortunately, whether we like it or not, perception is reality. When it comes to the investment at an early stage, I think what happens in a scenario like this is that everybody starts wanting to make sure that their existing companies have a safe path forward. They want to, we as fund managers want to extend runways, because what has happened is there is going to be some degree of challenge, and depending on how long this lasts, this could even last longer, where Series A and Series B investments may not happen. So we will then focus on making sure that our existing companies which were doing well, minus the impact of COVID, get the ability to sustain and are in the best position to thrive once the virus situation is under control. Which means that there will be a bit of pause in check writing. I am carefully using the word bit of a pause. I'm not meaning to be overtly throwing, like saying, no, we are in a panic mode and everybody will freeze. No, I don't think so. The other extreme will happen, because most people who cut checks also understand that it is a 10-year game. So if there are innovative companies and all that, there may be a look in, but that fraction will really go down very, very significantly until people are having some degree of confidence that scenario will start building up again. So to sum up, yeah, fundraising will be tough, and soliciting new investments will be tough. It might not shut out, but yeah, it will be manifold more difficult.
Abhishek, interesting to have your thoughts around this, because at times you have 70 odd companies, right? Since all of us are speaking that naturally it would be slow, and how slow it would be possibly we'll come to know once these uncertainties will start unfolding more. But what are you talking to your portfolio companies in terms of this fundraising? Because the funds will face hit, deployments will be low. What are you speaking to your companies about this?
So Ishpreet, I think I have both positive and also a negative view on this. I think Ashish is absolutely right when he says in the short term, it is going to be very difficult for investors to invest in companies. Similarly, Siddharth said that it's going to be difficult for LPs to invest in VCs as well, right? But right now we are in a position where almost everybody is trying to assess the situation of what is happening. Nobody has a very clear answer of how long this is going to last, right? So I know I agree that in the short term, this first time, a new check, for example, I'm not writing a new check right now. I'm still in that position where I'm figuring out where, how much the pain point is and how long this pain will continue to happen, right? But that said, we have committed and invested in all the commitments that were going forth, right? In my opinion, and there is a silver lining here is, and that what Karan mentioned a couple of days back when we were speaking, is that there is enough dry powder in the ecosystem. VCs have fiduciary responsibility to write checks, so they will write checks. I think there will be, they will come together, get their heads together and figure out what are the different sectors that they are going to be, and it will change, right? So for most VCs, I think the sectorial preferences will change. We understand that we are in a situation where, there will be a massive unemployability and a massive cut down, and as well as valuation write-off in a lot of other sectors, whereas some sectors will also see tailwinds. We already know that edtech sector and a work from home and collaboration and digital communication sectors are seeing a massive jump, right? For example, Zoom, which was seeing 10 million users, is now suddenly seeing 200 million users, and massive jump in their valuation. And so what we are seeing, edtech sector, there's a lot of engagement and a massive increase in revenues for that sector as well. I think after this pause is over, small pause is over, my belief is VCs will change their tact a little bit and start to write checks in companies that will start to make more sense post the COVID-19 era. Long-term allocation of capital still remains to be a question. Whether it's going to be 12 months to 18 months remains to be seen. But if you look at historically, most depressions and whether it's what's 2008, 2009, or during 99, 2001, it will last somewhere around 12 to 24 months. Frankly speaking, this is an event where nobody is right now sure what is going on and whether there will be a second wave of infection as well. India is probably shielded much more than the Western world. We will probably see less impact, but the economic impact will still be there. So I would say let's wait a couple of months. Let's this lockdown lift and see how the infection actually impacts the larger economy before we can take that long-term call.
Sure. Karan, to you, two facets of the question. Naturally, you have seen 2008 financial crisis. I'm not saying that we're comparing this to that right now, because there are some uncertainties. It might be more, it might be less, it might be similar. But since you had an investment banking, you were in States earlier, right? Now you're back here leading the investment Swachharate. What are you speaking? We spoke the other day about your portfolio companies. What are you speaking to them? Abhishek brought up sectoral focus, that sectors would change. So which sectors possibly will start excite you, and the other companies of yours who might not be in the same manner? What are you speaking to them for the runways and the impact that it will last to them?
Yeah, so I think, look, that's a very important question, and I must say that what we've seen is an amazing spirit within our portfolio founders, and I know this is true for a lot of other funds as well, because this is a sentiment that's been shared. I think the speed at which founders have moved to take stock of what's happening, to realize how deep the impact will be, and then to plan ahead. I think it's been in the last 3 weeks since basically this work from home started for different people. The kind of action and the speed at which people have taken decisive action has been amazing. So, and most founders are going through a downturn for the first time, right, in their lives. So I think having experience obviously counts and helps, but it's just great to see how people have sort of moved. So I think that gives us as investors a lot of confidence. What I think right now a lot of us are doing is working closely with our portfolio companies to look at what are the ways that the business model has changed in the short term, what will be the impact potentially in the long term, and maybe you have 2 or 3 different scenarios, right? To say if the lockdown opens up on April 14th or 15th, if it takes another 30 days, 60 days, 6 months, whatever, because you have to plan like that today. You can't make that plan 3 months later, 2 months later. And there are some very tough calls people have taken. You see in the press, a lot of founders have gone to 0 salaries. And a lot of people have taken voluntary pay cuts as well, and that's never easy. But I think that's the kind of collective spirit that we're seeing, not just in our portfolio but across. And I'm part of a VC initiative which is it's called ACT. So one of the things we're doing is also helping fund potential
I'll highlight that.
start. Yeah, so potential startups, but I think beyond that, the way some of the more experienced entrepreneurs are mentoring and going out there and talking about issues like this really helps. If you just look at a sectoral focus, I think two parts. I think one is the near term again, where as Abhishek mentioned, ed tech, entertainment, collaboration tools, and healthcare, especially digital healthcare. I think those are things which are seeing an enormous uptake for obvious reasons. And I don't think this will be a blip. I think those things will continue because this period will fundamentally change how consumer behavior happens. On the other side, if you look at B2B businesses, there's two very different tracks. A lot of startups which have exposure to the US may see some sort of a slowdown in their own growth because their end customers are based in the US, right? And that has a ripple effect.
Yeah.
But then there are a lot of, so the distinction one must make is, are the products that you're providing, is it a good to have or a must have? And very quickly you come to that, as in founders come to that conclusion. The only other thing I want to say is, I think as fund managers for all of us, are the one side of responsibility is to founders, the other is to our investors. So, there is a lot more in terms of communication that's happening on the other side, because those people, whether they're in India or outside of India, also have a worldview of things. So it's important that we understand it, we share it with our portfolio companies. And then it really becomes a two-way communication with the fund managers in the middle. And that's something which has started now. Hopefully that's a best practice that we take forward, because we get to know some things which we didn't know because of our access, and then we're able to share that with our founders. And I think that sort of discipline will help us. But the way I think, just to sort of say again, I think the way the whole startup community has come together, founders, investors, people around the table, it has been amazing, because I don't think that's happened in China to this extent. I don't think it's happened in the US. And it helps that we're still not a very, very large community, but still how everybody's come together has been pretty amazing, including like a webinar like this, by the way.
Thanks, Karan. But yes, I'll probably later will touch upon this in terms of that fund which all of you guys have initiated, which is only focused towards COVID relief measures. Siddharth, I want to bring you in here in terms of, so we've been hearing about J curve, L curve, U curve, right? Also, we've been speaking about how economies are getting affected. So once this is over and we are in at least decent times, if not the most sanguine times, how do you see the global trade or companies which have been dependent on external support, whether it's customers or it's basically the suppliers? We understand China has opened up and they've been after India now to start the inputs again. But how do you see that? What are you speaking to your companies about?
See, the entire global paradigm is actually going to shift as of now. All this time we've been talking about pre-GFC, post-GFC. Now I think the new vernacular is going to be PC before Corona and AD after Tezis. So in the new post-Corona architecture, what we're going to see is the entire offline play, the reliance on the offline play is actually going to go away to a very large extent. The entire move to online is actually going to become far more accelerated. So any companies who actually work in those interspecies that allow companies to actually move online or to actually enable commerce, transactions, any sort of interaction to actually move online, those are the guys who are actually going to start driving the entire global world as of now. What we're going to start seeing is even automation. Automation is going to become a much more important aspect of it. Like we've seen that disruption that's happened to manufacturing now is primarily because of the fact that large congregations of people have actually been banned. So the push towards robotics, the push towards automation is actually going to become far bigger. In fact, there are several people, several of the managers on this call itself have actually funded companies who are actually accelerating that push as well. So that's actually going to go through. So even with all our portfolio companies also, what we're actually educating them is the fact that the push to online is actually going to be one of the most fundamental drivers of the world economy in this post-COVID architecture. That being said, one of the most important things to do is, in order for you to actually find your niche, there are several people now who want to actually start looking for somewhat low-hanging fruit, like telemedicine right away, or they want to start doing grocery delivery or something like that. That isn't what we're seeing. The glut of startups coming there is a blip as of now. The moment things go back to normal, everything's the entire curve actually flattens. Then there's going to be inundation of startups over there, and they're going to start seeing M&A activity or people being laid off. So it's important for people not to react as of now with what is happening, to actually take a much more long-term horizon. For all the entrepreneurs and everyone in this particular space, when it comes to cross-border transactions, like somebody on the call also mentioned, people like Zoom or someone, for example, they don't have to have a presence in India or China to actually for people to access the software, right? International sales is going to become far more competitive as we go about it. But the only thing that's important about that is what is the pricing that you can actually deliver and what is the value that a customer or a client can actually accrue out of this. Because as of now, just sitting from Bangalore itself, I have access to Zoom, I have access to AirMeet, I have access to several other companies who are actually present over there. But I need to figure out which is the right tool in order for me to actually choose. And given the number of players in that market, the marketing pitch that someone actually makes will actually become more important. So when people are developing their products, the way they actually pitch their products, the way they tailor their products to every person's need, regardless of geography, regardless of orientation, regardless of anything else, and the price points will become crucial as things go forward. One more thing we are going to see is that more than cross-border trade is going to move online more often than not. But cross-border funding is actually going to become very crucial as well. In fact, after COVID, China and India are going to be the countries who are actually going to come out in a far more healthier position compared to everyone else. The triage that they've actually instituted here and the convalescence that the country has to go through will actually be in the span of about a month to 45 days, whereas for the rest of Europe and for the US, etc., it's actually going to take them at least about a quarter in order for things to go back to normal. So at that point in time, it's actually imperative for startups who have conserved cash as of now, and when the funding tap actually starts, to start looking at international expansions. When you are looking at international expansions, look at countries who actually face similar problems to India. There's a very old paradigm that says that Silicon Valley can build for the first billion internet users, whereas India can actually build for the remaining 6 billion people who are coming onto the internet. So people should actually use that and start identifying a place in not just in Singapore, Thailand, or Southeast Asia, but there are a number of opportunities that are actually evolving in places like Latin America and Africa as well, that Indian startups actually shy away from. The moment they start tailoring the pitch towards that and moving towards that, they can start accessing the pools of capital over there as well, and then actually bolster their expansion. COVID actually becomes an opportunity. As I mentioned, there are a number of people who have actually done international expansions. It's important now to rely upon the entire community, not just of VCs, but of ex-entrepreneurs, ex-CXOs and all as well. Learn the best practices that are around. So when this COVID actually does pass, and this too shall pass, this is one of the most important things all of us should keep in mind now. How do you navigate that new architecture left entirely up to you? The entire world becomes a blank canvas as of now. It's important for you to actually make the right moves in order for you to capitalize upon it.
Yeah, point taken. Ashish, since you've been driving exits in Bloom, right? And you've been sitting on, as we discussed, there are 3 funds, active 3 funds. You might be already thinking about some of the exits. How do you navigate this time in terms of looking at those opportunities? Does M&A have anything to do looking at the scenarios, or it's too early to call? Naturally, the caveat being that there are uncertainties around, so this is not assurance, right? But how do you trying to prepare for that?
So I'll be candid, Ishpreet. At this juncture, I think post lockdowns, I think companies and therefore us, all of us will have to first work hard towards making sure that we can justify the valuations that we got in the last round. So what I'm trying to emphasize here is that we were coming from a scenario of a fairly high momentum and growth, and then we kind of got into a hard wall, and we have been forced to just stop. So to go into and flow into those valuations is going to be the first priority. I don't think it is going to be very natural and easy to go out and get exits. That said, it's hard, but I think we should still, we would do well to keep telling ourselves that every cloud has a silver lining. No matter how little it looks today, it will start getting a little clearer over the next 2-3 weeks. Is that some of the conversations of M&A or integration or consolidation become much more practical. Even the largest of the enterprises have been following a method where you are buying growth, raising money, and forcing ahead the game. I think we are at a zone where capital will stop becoming the moat of the business. Correct. There will be fundamental factors which will drive valuation, growth, follow-on fundraising, M&As, listing, exits. And for that, there might be necessity for some large companies to go and work with equal size companies or acquire smaller companies. So the scenario could definitely throw up interesting opportunities as well. I'm not convinced that, yes, I acknowledge that I'm not trying to be an opportunistic here at all. I'm worried about what happens over the next 4 weeks. How do we come out of this? But at the same time, somewhere in my heart, I do believe that we will get some or the other benefit and driveaways to learn from. And those who take away the lessons, adapt well from the scenario, have managed to conserve the cash, have the ability to negotiate an exit for themselves, we will have those opportunities.
Abhishek, two facets to the question. First is, since there are uncertainties, right? There's no denial. How do you basically, what are you saying to your companies, and what companies are saying to their team? What kind of leadership qualities now will stand apart, according to you, for the right kind of founders, not only navigating the runways, but also managing their teams, what they speak to their teams?
Very good question, Nishpreet. So again, there are two ways to look at it. One is the very short term, the next 1 month, 1.5 month, when we are in a scenario where we don't know. And again, the companies, investors, and everybody is trying to assess this. And then what happens after lockdown opens and the business is, as usual, and everything opens up and we go back to our offices, etc. From then on, what is going to happen, right? Our advice to our founders is that we need to tighten our belt. We need to look at the long term rather than the short term, and see if you have cash to last the next 12 to 18 months.
Right.
But at the same time, be very empathetic to your employees, employers. As Karan had mentioned, across the board, we have seen that the founders have taken the massive cut, the biggest cut. Some founders in our portfolio companies are saying that we'll not take salaries for like next 3 months or so. But what they've done is they've taken a staggered approach to also cutting down salaries in the middle management and senior management as well, right? And I think this is, and one thing that we have seen from a couple of companies, and then we have propagated to the rest of the companies, is have a very open dialogue with your employees, right? Unless you are a very large company with 10,000 people, which, I think there's just one in our portfolio. Most of the companies are having a very open dialogue to the employees. They're asking employees what to do, and employees are coming back and saying, we are open for a cut right now because we understand that it's a scenario, unprecedented scenario. We are going to face this challenge. We don't want to be without a job, right? Because what is the other outcome of this if we continue to be employed at the same salary, same CTC, and 6 months down the company doesn't have money to pay it, right? And so the other part of it is, and we understand, and almost every investor will have this in their just going to what Ashish said is, in the long term, if there is not a runway of 12 to 18 months, there's going to be pain. And remember that we, again, coming from 2008 till 2020, we have been in the biggest bull run ever, right? 11 to 12 years of bull run has not been seen so far, at least in the history of till I started studying business and doing business. And this means that the valuations are at the highest point currently, and those valuations will be questioned because nobody is now going to give you, for a SaaS company, a 10x return on the revenue. Then how do you take an exit? You will have to take a cut. Ultimately, those companies that are going to run out of cash are going to get consolidated. There is going to be a lot of M&A activity 6 months from now.
Yeah.
And it's inevitable, unfortunately. As investors, we will have to take a cut on the valuation and say, okay, go ahead and sell your company because I think we deserve. There will be vultures as well who will be about to buy the companies. So the capital is actually the thing.
Yeah.
Actually, if you look at it, people who have the biggest cash flow and these top technology companies and other companies who have been running profitably will go ahead and buy IPs and buy good teams. Unless we see that things improve in 6 months, which I don't see that happening. So I think the biggest quality of an entrepreneur is, being very logical about what they see, extend their runway, be resilient, but at the same time, be very, candid with your investors on what you are seeing and whether you will last this or not last this, right? Again, don't get me wrong. You don't have to decide in the next couple of months. You don't have to decide right now when we are in a lockdown, because again, I keep saying this, I'm the biggest fool right now because I have no idea of what's going to happen.
Right.
Everybody I see on the TV, I see on a lot of webinars and see everybody saying, oh, 12 months, 18 months. I was actually listening to a podcast of Chamath who said 36 months, everything is going to be really bad. Companies will crash and there will be only 5 or 6 standing companies at the end of the day. I don't think that's going to happen. But again, I don't know how to take that call. There's still people who out there are trying to model the scenarios and come up with, plausible explanations, right? We know that there's going to be unemployability. We know that there's going to be massive cut in valuation. We all know that, right? But really wait for 2 to 3 months before you take a real call on how does your bank account look like? How much money do you have? Whether you are going to be walking into a M&A discussion very soon, or whether you can cut down to create 12 to 18 months of runway. It will not last, in my opinion, more than 18 months.
Yeah, I think Karan and Siddharth, I would want to have your opinions on this as well. Basically, since you have a lot of companies, right, and naturally all of the companies are judiciously selected in terms of founder-driven and what kind of qualities founder has. How actually that qualities will play out now in terms of the leadership test when there is dearth of capital, and do these strong founders succumb easily in terms of the M&A or other things? So open to both of you.
So happy to. I think I don't mind taking this. See, the most important thing to realize is that scarcity is actually what breeds innovation. So the true mettle of a founder is not actually taken when the company is doing well, everything is going great. The true mettle of the founder always happens when there are extraneous factors or internal factors that do actually prey upon the company. For example, see, the thing about valuations also, a very good point that Abhishek also made. See, valuations are a very subjective thing. A rising tide lifts all boats, but the moment all the liquidity gets sucked out, everything actually comes crashing down. And as Ashish also mentioned, people have to essentially grow into their valuations. All valuations are always ahead of value creation. Now, the best founders are the ones who actually realize this. So when things actually do get tough, they actually have the wherewithal to make the tough decisions. And first and foremost, you always have to lead by example. Most of in our entire portfolio as well, the founders have actually taken the deepest cuts in salaries, not just for a period of 3 months, they've actually extended all the way to 6 months as well. They want to make sure the company actually conserves cash. And by example, they've actually inspired all the other employees to cut down. The founders have taken a very aggressive stance in making sure whatever receivables they have from other larger corporates, etc., starts coming in. They started driving the teams a lot more than they did previously and started getting involved in almost every other aspect of that business. And they're the people who wake up at 6 a.m, sleep at about 2 p.m, and actually work towards making sure the business actually continues. These are the kind of founders who, even in an M&A activity, will actually come out on top. And during this, and as Abhishek also mentioned, M&A activity is actually going to become more prevalent more often than not. A large amount of this M&A is also going to be driven by stock. And most of the stock coming will actually be junior in terms of the entire rights, liquidation preference, etc. So it takes a very, very strong founder in order to convince the M&A partner that what is the value they're actually bringing on board. There have actually been cases where companies who have at least 3 months of runway in the bank have actually acquired people who have a lot more cash in the bank. That's because they could actually convince the other companies, investors, and the founders that in case they do actually merge together, this company which actually has lesser cash actually has a better chance of survival. So all this actually feeds into the metal of this. And another thing that's going to be extremely important for all the founders as of now is to make sure that they actually keep their investors in the loop. Communication, as Karan also mentioned, is actually going to be key at this crucial point in time. Right. Whatever you've hidden in the past and everything can all be forgiven, but the moment you actually let everything out, even the investors can actually start working with you on this to a much greater degree. The human touch and the human capital at this point in time is going to be as important as financial capital. Financial capital will come. Financial capital rises and ebbs with sentiment. But the firmament of the person and the founder who actually runs the business is something that can't be replaced. And that in turn actually determines the core DNA of that company. Even when we invest, I'm sure as everyone else also invests, we actually do greater diligence on the founder and the founding team as much as we do on the company. Because no matter what happens, once you invest, you're on the same boat as the founder. And it's actually the founder who's the one who's going to be driving the entire company, right? Nobody invests in a company for the privilege of running them, except for SoftBank with WeWork, but I think SoftBank's an exception and WeWork's a bigger exception of an exception. But this is essentially the sentiment in the market as well. So all the founders as well, we've all been saying this too shall pass. But the thing is, you need to make sure that you can actually breathe through this. It's for a number of founders that are actually excited by this crisis because it takes them back to when they just founded the company. They don't have much cash in the bank. Their business model still has to be fine-tuned as of now. Things are actually burning all over the place. It's when everything is burning and people actually get excited and they actually start working a lot more harder and a lot more passionately because the entire circumstance dictates and mandates that they do so.
Karan, your views, do you share similar views, and do you want to share some of the best practices of these founders?
Yeah, so let me pick up on that last thing that Siddharth said, because I think that's the single most important thing that has come to light. And you do remember, when you're investing in a company and when you're, spending time with the founder, it actually takes you back to that, because you're like, this is why I was so excited about this opportunity. Yeah, it was, what they were doing was great, but it's this guy, or is this, this lady or this person. And I think what we've seen in the last 2-3 weeks, especially in the last 10 days, there are a bunch of businesses which are down to zero, right? Just because of the lockdown. And not all of these businesses have, millions of dollars of capital in the bank. Sometimes it's single-digit million, right? Sometimes it's not even that. What's amazed me is how each of these guys, each of these people, and I know this is true for other portfolios as well, have thought about, okay, what can we do differently in this time to create either a product or a service that has nothing to do with what we were doing.
Yeah.
So, there was an example of a company which we were looking at, which does something, and then they're like, okay, by tweaking our production process a little bit, we can actually make hand sanitizers.
Yeah.
Literally, that product had nothing to do with it, and now they're talking to 10 different people for distribution. Very small example. This is true from the smallest of companies who've not raised any money, like this company, to companies who have like, okay, if transportation is down, if retail is down, we have a platform, we have users. Can we collaborate with somebody to make the best experience for our users who are still probably wanting to come on? So that the innovation and the innovative thinking that founders have, I think Siddharth said it really well. I think that's what comes to the fore, and that's a very, very big part of what helps you survive through such a situation. The second part of it is also what I think others covered is, I think, leading from the front. It's very easy to say leading from the front. That doesn't mean you're the guy who's presenting. No, that means you're the person who like, you know what, I'm going to take the biggest salary cut. And that's happened in every single one of our companies. I'm sure this is true for others. And that's not the only part. It's about communicating, how you communicate, what you communicate, when you communicate. You take people into confidence, right? And you take people into ownership, both literally and figuratively. This is where, I think ESOPs take a very, very different meaning for employees. All of that kind of helps bring the collective spirit for each company, right? And that's what drives them to say, okay, we're sitting at home, we can't do much right now, but we still have a product to support. But let me work on this one thing, which once business picks up, we'll never have time for. But it could actually create something completely different for the company. It may not amount to anything, but that level of innovation, that level of thinking, that level of commitment to the cause, I think that's been really, really amazing to see. I mean, it's something which we could not have imagined a few years back.
Very heartening to know this. Very heartening to know. I just want to leave this the last two questions open to all before we go to Q&A from the audience. So at Stride, we always the intent, you independently, as you know us, we've spoken. Our intent is that how can we possibly ensure that the equity is not getting deployed for working capital? What do you see? How do you see this in terms of going forward? How the debt can play? Working capital means working capital from debt funds, from banks. How do you see that changing? How do you see that playing a role going forward?
Actually, so I don't mind taking the first stab at this. So see, one of the biggest, I would say, biggest weaknesses of startups is the fact that they actually end up raising equity for working capital purposes. Because early on, they don't believe the cost of equity. Any student of finance knows the cost of equity is actually the highest cost all around. The cost of debt is far lower. Whereas initially, when a company starts off, they don't actually value the equity as much. It's only when the company grows, reaches Series B, Series C, when the founders start seeing their stake go from like 80, 90% all the way to closer to the late teens and even single digits, that's when they start actually valuing equity more. The older paradigm of fundraising has been that you raise an equity round, thereafter you wait a little while, then you raise a venture debt round or you get for debt financing and then you continue. I think what most of the funds have actually started doing now, this is only a recent phenomenon, is they actually try to rope in the venture debt partners at the very early stage itself. So when the equity round happens, like a letter round, for example, a Series A or something like that, you actually get a venture debt firm to actually partner with you on that, build up that discipline, because the thing about it is all banks, and banks will also follow. They usually follow the venture debt funds, and they actually look for companies who actually have the cash flows to sustain paying out those interest installments and everything over time. But that actually takes discipline. That takes a longer track record. You need to have at least 12 to 18 months of proving that you can actually service the loan before you can start attracting large amounts of capital coming in. So I think this is a mindset shift that the VCs have actually started instituting with their best companies. It's also a mindset shift that the entrepreneurs also need to start entertaining, because instead of raising, let's say, a $5 million equity round, you can actually raise a $2.5 or $3 million equity round, take another $2 million line of credit from a venture debt fund or from a bank as well, and then you can actually extend your runway for a far large amount of time while you're conserving equity in the mix. Would love to hear the thoughts of my fellow panelists in this end.
Especially when the equity is dry, or
Very
getting
true.
dry. Yeah.
Very true.
Sure. Ishpreet, I think the way typically it works is that when a founder is raised a round, we have been today using debt as a add-on option. It gets used up as working capital or an opportunity to extend the runway in the company. And this is true with a fairly large chunk of rounds where you have a combination of venture debt and equity coming in. I think this current situation also provides a very strong opportunity that founders who have had decent margins in the business and who have strong unit economics in their favor, if while they'll not be raising equity rounds, there is an opportunity to add on debt and customize solutions basis company to company rather than just have a stereotype solution. I think we will get to a phase 2 in our journey as a venture debt ecosystem, where all of the partners, and this is where I feel that a couple of the newer players would have an edge, is customized solutions for the needs of the founders at that juncture, rather than have a single typecast model. We have seen a few of those in the past, but I think it's good time for that to become the core in which venture debt fund operates. And it will be a good opportunity for founders to figure out how they can leverage their current financials and cash flows to augment their not only runways, but even thrive once the situation improves.
Yeah, no, I would echo the same sentiments. I think for businesses that are that have a strong cash flow, this makes a lot of sense, and more so now because this will extend the runway for startups. At least a few months to get over the current crisis that we are in, and especially way back when we started out in the ecosystem, 2011, 2012, we would always complain how banks do not provide debt loans or anything to startups, and this has changed in the last 3 to 4 years. And my belief is, as Ashish said, the 2.0 of venture debt looks far better and far lucrative to startups with a strong cash flow.
Yeah, again, not much to add other than saying that the biggest use of venture debt, I think, will be in how you're able to give a customized solution. A customized solution. Sorry.
The pedals are working from home.
We're adding a good human touch to our business. I think it's
True.
We should do a high five with him, her.
Well, it had to happen at some point, so that happened.
You managed it
multiple
well
times. No, anyway, look, just to complete, I think the biggest thing will be to look at different solutions, right? And it's plain venture debt is one thing, but I know, Ishpreet, having spoken to you guys, the kind of solutions that you're providing, the tenure of the solutions that you're looking at, and the end use cases. I think the same company can have 3 different use cases for venture debt.
Right. Yeah.
And how to actually work with those companies. And I think banks will also fall in line over a period of time. I think banks are a good source of capital also, for venture debt firms.
Yeah.
But I think being able to work with let's say the fund to understand, okay, here are 3 or 4 different use cases for venture debt. That part of it will really help in creating the customized solution that Ashish was talking about.
Yeah, as an ex-banker, I just vouch for that fact that since all of us will start talking more about unit economics, profitabilities, right? this is music to ears for working capital solutions, not for us at Stride, but for all the financial institutions who want to lend to this ecosystem.
Also, Ishpreet, the other thing which we have not seen yet is that there are a bunch of companies that raise very little capital.
Yeah.
And they may not have gone out, or they may not get love from the VC as quickly as one typically gets for a successful company, so to say.
Yeah.
I think that you guys definitely out there, having discussed some of these solutions, there can be a lot of solutioning and consulting proactively to figure out how we can support these and take them to the next round, which in turn benefits because the company is in a better position to raise the round more commanding, in a better commanding position. So I think let's go with Venture Tech 2.0.
Great. Siddharth, I think you made a point on the fund, and I think this is what we want to highlight, Karan, Siddharth, since we've been playing active role. There's an ACT fund and there is an impact fund on COVID, right? Yep. Which you guys have come out with. Do you want to speak about?
So I'd be happy to. So the ACT fund was essentially, this is the Action COVID team that we actually come about with. It's a combination of various entrepreneurs from the ecosystem and various VCs and all as well. It's about 100 crore corpus that's actually crowdsourced all this money from the entire ecosystem. And the purpose of this is to actually support companies who are actually actively fighting COVID. It's not just companies, but companies, institutions, organizations, people, etc., who are actually fighting COVID and who are actually creating solutions to actually mitigate this. It's not just fighting the disease, but fighting the fallout of that as well. So this is in terms of mitigation measures, getting life back on track, early detection, helping to combat fake news, and a slew of other activities. So all of us are online. What we can actually do is just on the group chat or something, we can actually share the link. If there are any people, companies, etc., who are working any of these solutions, feel free to reach out to us. All these are given as grants. So these are not any equity-based financing. There's no question of valuation rights, this, that, or anything that goes about. All the VCs are not wearing their VC hats, but they're actually wearing their more compassionate hats at this point in time, saying that if there is any good that needs to happen and capital is the only constraint, we will actually bridge that gap and ensure that you have the capital to make sure that our country can actually come out of this crisis. And these solutions can also be taken across the entire world to make sure humanity as a whole does not have to suffer under the umbrage of this disease for any longer.
Yeah, that's a great audience today. It's 800,000 attendees as founder level. Karan, do you want to make that point?
Yeah, look, I think it's an amazing effort of entrepreneurs and folks from different VC funds. So I'm helping lead a team of, I think there's about 50 maybe 60 volunteers by now from different VC funds who are basically going through evaluating proposals that have come. We had 250 proposals as of last night. This has all come in 2 days. And along the tracks that Siddharth was saying, right? So it's not just around prevention, it's around hospital equipment, it's around manufacturing of PPE or supplies of PPE, it's looking at contact tracing. So various different streams. This is all obviously done with the intent of how you can create work streams to look at different things around the impact that COVID is having, including working with NGOs, right, and charitable organizations, where they're working with migrant workers, etc. So it's really all encompassing, and obviously, since all of us invest and breathe technology, wherever we can have that as an overlay, that makes that makes the biggest difference. But I think, as Siddharth said, we just want more and more people to apply for this. We want more and more people to get involved with this, because at a time like this, I think the single biggest thing you can do is just to keep giving, right? Whether it's to, and I don't mean in form of money, I mean in terms of your time, in terms of your effort, whether it's to your startups, whether it's to your investors, whether it's to your employees, whether it's to collective efforts of something which is making a difference in society. This is just one platform, but it's a very, very broad-based platform across, the entire startup ecosystem. And, however we can help with entrepreneurs who are developing solutions like that, would love to do that.
And that's great to hear. Yeah. So we are getting a lot of questions, so I'll straight away go to the Q&A and from the attendees perspective and leave it open. We have some specific questions to specific people as well. So Abhishek and Ashish, for you, as a founder of a co-working space, at the moment, rather than raising funds, I'm more concerned about the sustainability of the sort of model which we should choose due to change in customer perception post-COVID's wave. Do you have any advice on the shared work, co-living, co-working spaces?
So, Abhishek, I'll go first.
Yeah, go ahead, please.
Sure. Thank you. So, Ishpreet, I think definitely it's a valid question, and there would be challenges around it, and these things are going to bother a lot of companies when it comes to optimizing some of these things. That said, I think communication and the way the things need position also have an opportunity to correct some of those things. The reason I say this is, in a post-COVID scenario, when funding, movement of cash and currency is going to be a challenge, some of the business models that are on sharing, that thrive on the overall shared economy, do have an opportunity to make a better case. So I think so far as there is readiness and preparedness to spend on a little bit on communication, but more on giving the comfort about how things are going to get taken care of. There is going to be better sanitization and infrastructure which is going to be conducive to manage the disease and the virus. I think you should be not too much worried about the scenario, but this also means that you need to have cash in hand to invest in some of those initiatives.
Yeah, nothing to add on. I would say it's a tough situation, but human psychology is also very forgetful. So my belief is there's a lot of companies will get back to co-working spaces, and we are social animals. Think of it. After the lockdown, and just hope that the lockdown is just 21 days and things improve after that. Things will go back to normal. People will go back to restaurants. People will go back to co-working space. So if there is enough cash in the company to last these 21, 30 odd days, my belief is the cash flow will start again.
So I think especially on co-living, Abhishek, how do you see that?
See, my belief is co-living, co-working ecosystems will continue to work. There will be some consolidation, and a few people who have low cash or were losing money will probably consolidate or close. But my belief is in the short term, after the lockdown, the business will start. Maybe there will be a 25-30% cut, but in the medium to long term, these are important, very, very important businesses, for any kind of an ecosystem. I don't expect everybody to start working from home, frankly speaking. I see that impact to be just 5 to 10% of the overall population.
So I actually was sorry. Go on.
Huh? No, I was just going to respond. I think just on Abhishek's points around the working from home, remote working. So I also agree. I don't think it's going to be all pervasive where like 50% of the people start working from home. What will happen is, I think overall the collaboration and different kind of platforms which allow this, that will give people the flexibility to be able to do it more often than not, right? And in our sort of industry, which is investors, founders, I think that was kind of there, right? In any case, especially on the technology and on product and development. A lot of people in engineering teams do work remotely, so it's not like it's a this brand new phenomenon that's come about. But I think in a lot of new industries which were not used to it, some of these practices will get into how people kind of operate. So I think that part will be interesting. And just the last thing, one, because we do investments in mobility and transportation, we were looking at some of the data from China that some of the other investors from there were able to share. And one of the first things I picked up there, not surprisingly, was road transportation. And in the case of shared transportation, it was actually single use case, or at best two users coming together. So things like rail and bus transportation took a little bit longer, and it's only a month old, so just maybe we don't need to read too much into the data.
Right.
But the use case of bicycles, of where there are one or two riders, I think that came back very, very strongly.
Yeah.
And shared mobility, I think, again, like co-living, co-working, is kind of here to stay, because it's not like you're providing a nice solution. It's something which people need, and that's why people have taken to it so quickly. It's here to stay. But I think those will be one of the first few things to bounce back much quicker. And in some cases it'll have that ripple effect very quickly. In other cases, like rail and maybe even airline transportation, will take a little bit longer to come, because those are for the business travelers, that'll be there. But for leisure travelers, people will really think very long and hard about how they want to take their conduct themselves in those sort of situations.
Got it. I think
So,
yeah, Siddharth.
So I just have a slightly different take on this. If you actually look at the P&L of any of the startups, the three biggest drains of resources are number one salaries, then followed by marketing, and number three is rent. What we may see happen in the post-COVID architecture, since people actually used to working from home and everyone subscribed to a suite of productivity tools. Instead of actually having an office for, let's say, 100 people, you may actually end up having an office for 60 people, with about 30 or 40 of them being the core team, and the remaining people slowly circulating in as of when that happens. So we will start seeing new models of people actually leveraging their learnings from this particular lockdown, and the quarantine, etc., into their business in order to reduce costs as well. So we will see the shared economy will not go away, but the shared economy will definitely evolve in terms of its offering and the way people actually interact with the same.
Yeah, I think Karan touched upon it. The question next was the same thing. Basically, both of you have investments in shared mobility. Karan touched upon the shared mobility piece. Do you believe the same on Karan's view, that basically the two-wheelers impact might not be as much as a rail or some other transportation means?
No, that's true. That's right. See, because shared mobility, even in this particular time as well, riding like a bounce, a Yulu or a Vogo or something like that, it's more individualistic. It actually gets you from point to point, and that's what people are actually looking at. Micro mobility has taken a hit as of now. All of us are seeing the numbers, but that will actually bounce back first and foremost. There is still going to be that sort of specter of paranoia amongst everyone saying, okay, if I go into a bus, if I go into a train or something, will there be someone in the entire compartment or the bus who may have this virus? Will I be exposed? So that in turn, that paranoia to actually go away will actually take a longer period of time. In that particular interim, the shared services, your micro mobility and your mobility service will actually see their numbers actually pick up, because people have gotten used to that as well. And everybody wants a more individual means of transportation, while actually being sustainable in nature. So the IC engine startups may actually face some hit as of now, but the guys who actually do in terms of electric, etc., we start seeing the electric offering increasing and becoming more popular immediately after the quarantine and lockdown are lifted.
Yeah, let me use an analogy for that. I think the world will not move to namaste. They will, after 6 months, be back to handshakes and hugs.
Yeah.
Yeah. I mean, look, I think absolutely right. Yeah. Look, I think, especially as an Indian society, in a lighter vein, I think we also tend to swing, very quickly, and our memories are generally shorter term in nature. So,
human psychology, I would say.
Yeah, I think some of the developed economies may take longer to go back to how things operated, because the scars there may be a lot more deeper. This is on April 3rd. Right? I may have a very different view a month from now if we're still in this situation.
No, we are talking about today, Karan. Yeah. Well, how do you see it today? Yeah.
No, I think the bounce back will happen, and people will have shorter term memories, because you have to understand. I mean, we have to understand. We saw this when we saw the plight of the migrant workers. What's the option they have? What's their alternative, right? So, I mean, if people have to do what they have to do, they will do it. And I think the way developing economies rebound back, purely from the way consumers behave for various things, not just buying, etc., will be very different than developed economies. That was the point I was trying to make.
That's good to hear. There is a positivity from that perspective, that we have a short-term memory, and when this will be over, we'll be back soon. 2-3 quick questions from naturally there'll be some kind of changes post-COVID, we can't deny that. So as of now, how do you see the COVID excuses coming up from B2B customers' perspective? Are the receivables getting delayed? How it's impacting there? Are the businesses speaking to you about this? What are the excuses coming from the customers?
So I can, Abhishek, please go first.
No, I was just going to say, Spreet, that, it's not excuses. I would say there are two parts to that problem, right? The first is that most people are right now trying to figure out their own businesses and own cash flow, and anything that is discretionary, they will go back and say that I don't want this. And then the second part is about need and want. If I need this and it's very important for me to run it, I will continue to run it. But if I want this and it's just an add-on that is good to have, people will cut that flap. And we have been advising this to our startups as well. So I don't think it's about just excuses. It's
more
right
about
now call
B2B
of the hour.
receivables, more about B2B receivable where the large corporates have to pay.
Yeah, no,
Right.
I was talking about B2B receivables as well, right? I'm subtracting the companies who already have excuses every time you go to them, and you know who we are talking about. But I was talking to B2B.
Yeah.
We have a few B2B portfolio companies as well.
Yeah.
We are not only B2C.
No. Some other views there?
I think broadly, what's happening is I definitely feel that most people are today struggling, and everybody is telling all around, including at least half a dozen times in this panel itself. We said, please conserve your cash, find ways and means to extend your runways. And that paranoia was about 2 weeks or 3 weeks ago. We are in a panic. And everybody is doing all that they can, and that includes postponing outflows and payables and all that. And that is creating a liquidity squeeze in the system in general. And this is not about startups alone. This is about large enterprises who are holding off their payments, who have simply said, we will talk to you after the lockdown. So in a small number of cases, I do believe that they have the money that they can pay off. But in most of the cases, there is either no money or there is too little money for them. And they're in that zone where they're evaluating, what should I do? One can only put a advice and a appeal at this juncture where you say that, guys, don't, when you have the capital, don't hold it off for no reason. But one can't really find fault today. We are all facing this challenge where cash is becoming the critical aspect from being the king. So I think there is a general tendency to just hold it, and we don't have a quick fix solution. But post-lockdown, I think some of that behavior will be better off. I do see the consumption cycles back on track. As we get phased-wise opening up the lockdown, where we see that cities which are not in a severe affected red zones will open up. That's my worldview, not that somebody has told me. We would see that at least consumption will flow, and post that some easing will happen where people will be getting some confidence back and release liquidity back into the system. But otherwise, it looks to be scary. The hoarding of cash will have a much bigger ramification if we don't get the liquidity cycle complete.
I think receivables management is something that's going to be on the top of the mind of almost every single B2B startup. But what I actually have confidence in seeing that there'll actually be new financial products coming about on receivable management itself. Right? People not just discounting or factoring, but there can be additional products you can actually come in which are secured by the receivables and the creditworthiness of that particular person as well. And people are going to be more aggressive in this. Receivables, everyone concentrated on sales for such a long time. Very few people concentrated on collections. So I think now it's actually going to get inverted. Collections are going to become as important as sales as well, because seeing profits or seeing sales on paper doesn't actually translate to cash in the bank. So I think all startups have actually learned that lesson now. And this is something people will carry forward with them even after this entire thing, after paranoia, panic, and everything goes back to normal.
So this is the last question, and I would request 30 seconds of everyone on this. Basically, I know it's early to call. There are uncertainties, and you guys would be very apprehensive in terms of writing fresh checks as of now. You would want to support your existing companies. But given an option, which are the sectors which you definitely see going today or sitting today that would be more looked upon individually by you as funds? So for example, financial services sector might be a back burner for the next couple of years is what we see. But some other sectors which are there in your mind, which would be a top priority.
So I think, so I can actually take this. I think first and foremost, it's going to be the attention economy. Everyone's now realized that they have a lot more free time than they used to, and everyone's consuming as much content as they can. So the attention economy with vernacular in particular is going to see a large amount of traction coming in. Collaboration tools and SaaS, anything that minimizes the need to actually go out of your house and actually brings everything to you is going to see far greater buoyancy in the near future. Micro mobility, we've already spoken about as well. And I think the last sector that I think is actually going to come through is actually going to be like fundamental sciences. They're actually going to see people doing hardcore research in drug discovery, antibiotic drug discovery, antiviral, research, etc. Start seeing a large amount of venture capital funding coming in. Everyone's spoken about deep tech, but very few people have actually put dollars behind it. I think in the post-COVID architecture, they are actually going to start being seen as more attractive to a larger number of VCs, and VC funds are going to become larger in their tenure to accommodate those particular heads as well.
Yeah, I'll just add to that, because that's a program that we were actually running before all this started. And I think because of the impact of this, the kind of companies and the kind of ideas that we're seeing is A, more relevant, and then B, it just gets a lot more attention because of the lack of overall healthcare infrastructure we see, not just in India, but globally. And the use cases are not just for India, right? A lot of these can be global use cases. So that is something which I totally agree we'll see a lot more of. And the thing is, the talent in entrepreneurs, the opportunity and some of the resources they have do exist in India. It's largely in silos or in affiliation with with engineering and medical colleges. I honestly, I think it's the job of investors, from angel investors to VC investors, to bring all that up to the fore and get a lot of those companies and opportunities the right kind of platform to be able to help with commercialization or help with development or whatever they're working on. Those are things which I think will, and we feel will be very, very attractive. We've touched upon the others. I think it's obvious stuff beyond what I think Siddharth said. I think anywhere. I think the overall digitization of delivery, of discoverability, and just the feedback loop between users and the platform. Anywhere you can do that, whether it's education, fitness, which are the two obvious ones. Right. Anywhere where you can do that more of, that's what will become more in line with where dollars will go to, at least immediately.
All right. Sounds good. So as I sign off and hand it over to Sachin to take the next session, I just want to thank again all of you, Karan, Siddharth, Abhishek, Ashish, also the next panel who are coming in, Revant, Vivek, Farad, and Anirudh, for making it for this session. And thanks for your inputs. Sachin, over to you.
Thank you, Shpreet. Thanks for having us.
Thank you, guys.
Thank you, everyone.
Take care.
Thanks, everyone. I hope you can hear me well. Okay, let's start. Let me thanks for the wonderful.
Your voice, volume.
Is it better?
No.
It is actually lower, Sachin. So.
Can you hear me now?
Yes, perfect.
Yeah. All right. Sorry for this, guys. I've been struggling with my headset for a while. Okay, I think it was a wonderful talk. I certainly enjoyed it. As we get into the next leg of it, it'll be interesting to get the perspectives from the founders. We heard the investors. I'm very keen to hear how the founders think of some of these questions, because some of the topics will remain the same. Let me just start by introducing the panelists here. So we have Anirudh Pandita. He is the founder of Pocket Aces. It's the fastest digital entertainment company. We have Revant Bhate, who's the co-founder and CEO of Mosaic Wellness. Mosaic Wellness is a digital-first multi-brand consumer food company focused around wellness. He's also the ex-CMO of Rebel Foods, where he spent, did various roles. We have Vivek Gupta, who is the founder of Licious. You all know Licious, especially the ones who were born to meat. And Farhid Hassan, who is the co-founder of ShareChat, our own video sharing social networking service. Why don't we just quickly go and start with you, Anirudh? Give a little bit of introduction about yourself. I think you guys will do a better job than me introducing yourself. So Anirudh, for you to start with.
Hey guys, I'm Anirudh. I'm one of the founders at Pocket Aces. We're a digital entertainment company. Our mission as a company is to solve boredom. So we try and entertain people all across India through the day with different products we have. Some of our popular well-known brands are Filter Copy, which is the most widely viewed short video brand in the country. We have Dice Media, which has made some of the most loved content, like Little Things, which a lot of people have watched on Netflix now. We also run Loco, which is a gaming and interactive app. And we also run Gobble, which is a food and lifestyle network. We've just launched 2 new brands, which we can talk about in a bit. But yeah, that's a little bit about us.
Should we go alphabetically? Farid, you up next.
Thanks, Ivan. So hi guys, this is Farid. I'm one of the co-founders at ShareChat. As some of you might have heard about us, we are an Indian language only social networking platform. We've been raised a couple of rounds of funding and been around for a while. And as of today, we have close to 60 million active users on our platform. Yeah, I think that's what it is.
Thanks, Farid. Hi, everyone. Revant here, co-founder and CEO at Mosaic Wellness. We've still pre-launch. COVID has ensured that we're still pre-launch, but hopefully very soon we should be out with our first brand in men's wellness, and then hopefully in a few quarters, a brand in women's wellness as well. So essentially, we're building multiple brands, consumer products for health and wellness for most of the diaspora of the country. The idea being that as the population is now, at least as an economy that's sort of now entering into a decent developmental zone, focus on health and wellness is something that we believe should increase, and supply on the same is quite abysmal, and therefore we thought we should be providing some more access to the individuals. We'll talk more during the entire webinar. Thank you.
Hi friends, thanks Revant. I am Vivek, co-founder at Licious. Licious, as some of you will know, is the first meat brand in India. In India, meat has never been talked about. While all our groceries generally are branded, meat has been somehow left out. So me and Abhay, who is my better half, have been trying to disrupt this space with a high quality meat proposition. We are a farm to fork company, so we are in the back end, more like a manufacturing setup, and then in the front end, online e-commerce company. Sachin, we can't hear you. Nope.
Is it better?
Yes.
Okay. All right, so let's just jump in. To start with the opening remarks, I'll go to all of you, and I think much is being said about this whole outbreak. It's certainly a human tragedy of sorts. Affecting thousands and hundreds and thousands of people. It obviously have a lot of growing impact on the global economy. Every industry, large or small, is impacted, unless obviously you're making hand sanitizers. What is unique about the situation is, I think, the uncertainty and the ever-evolving situation. Which means you have to stay extremely agile, keep adjusting your tactics, keep watching the situation, and so on and so forth. So it'll be good to hear, as an opening remark from all of you, on what strategies and measures and tactics you guys are using to, look at the runway, extend the runway, but also come out strong out of it. Last panel spoke about things like cash versus growth. What about people? Should we retain, downsize? Basic things. So it'd be good to hear from you. Why don't we start again? Why don't we start with you, Vivek? Given you're into the meat business and a little bit of perception there, with the current situation. I don't know whether it's affected your business or not, but it'd be good to start with you.
Yeah. So thanks, Sachin. So meat falls under essentials category. Okay. So actually, pre-COVID lockdown, we have seen close to 150% surge in our demand. And obviously during COVID also, there is a lot of demand, which we are seeing. But it is not about, so there are two questions in front of us, whether this is a temporary demand or is a long-term demand. And somehow I and Abhay feel that there will be a big behavioral change from consumers' perspective during this time. Consumers will avoid going to crowded places to buy. Consumers will also may prefer more cooking at home. Consumers may not like to go to unorganized butcher shops. So this can actually be a permanent shift in their behavior, specifically to meat. While my larger feeling is that there will be a permanent shift towards all online sellers, that people will prefer to buy online more rather than queuing in the offline stores. So that way, it's a slightly tailwind period for us. We are, during this time, there are three things we are doing. One is we are passing on a message to within our company is capability building. How can we run a double size or triple the size of the company with same manpower within our corporate office? So spend this time to build that capability. When COVID gets over, how can you deliver 2x 3x return with the same people capital? The second thing is differently stated, but same message: do more with less, right? So try to deliver more and build some of the unique things which we have never been able to focus, whether it is on tech, and challenge some of the basic behaviors. For example, we were an express delivery company with a 90-minute to 120-minute delivery post order placement. So can we redesign our whole delivery thing, where rather than doing a 90-minute, can we become a slightly scheduled option and club deliveries? And with, let's say, a 300 delivery force in Bangalore, can we do double the size of orders? So these are, I think, the best times to maybe take a step back and relook at your design of operations and make it more efficient. And obviously, needless to say, but conserving cash is very, very important, as everybody has been talking. So we are not taking a step back on growth. We are focusing on growth while taking all the measures to conserve cash. For example, all the discretionary spends on marketing, we have pulled back. We have redesigned the whole marketing spend. So focusing a lot more on digital versus any offline brand spend. All the retainership agreements, whether it is with brand agencies or rentals of our warehouses, production facilities, or corporate offices, we are talking to all the landlords. Can we renegotiate for at least 6 months period? I think so. We should always respect cash, whatever the situation may be. But I think these are all the things we are doing during this time to make ourselves a better company, and once COVID is over, to deliver maybe more with the same resources we have in hand.
Thanks, Vivek. Interesting perspective there, looking at the positive side. Let me go to Revant. Revant, Revant, you obviously, in the midst of inception of a new company, and this is so it'll be good to get your perspective on an opening remarks on how you're managing the situation.
Got it. So, just to give one perspective, we've been very, very privileged because we closed our funding round just last quarter. And so before we could sort of even launch and be in a situation where we lose GMV, technically we're in a good place, because technically I just launched, being delayed is fine. But that being said, obviously we have a few expenses that and of course a strategy that may need to sort of realign. So just to give you perspective, if you're doing a consumer product business, if factories are shut, supply chain is disrupted, it's going to be very, very difficult for you to even scale, even post the situation. Let's say the lockdown ends, it's not going to be easy, right? And even though we are in health and wellness, it's not going to be easy for people to just start spending a lot of money there. Services is something that will pick up even better. So telehealth, telemedicine is something that will see a good amount of traction, but consumer product spending is still going to be, is going to take some time for the demand to come back. And therefore, our thesis was we've been sort of given a clear direction, and instead of trying to just go all guns blazing on sort of launching a product and convincing a customer to buy it, what we are thinking is we should first just focus on building out trust with the consumer. Luckily, because we're in health and wellness, we have a lot of senior doctors who are aligned with us. We are taking their assistance in providing a significant amount of content and trust building for the brand with our potential consumers in the future. So it's almost like taking the harder route to sort of build out the business. But in a way, at least it's also being true to what you would want to as a consumer brand, which is being customer first. The other piece which we have taken a little bit of a contrarian view on is even though we have spoken to all our see, marketing is always easy, right? It's Facebook, Google, AWS is one of the sponsors / coordinators for this, and all of them have been kind enough to extend credit periods or look at giving additional credits for this. But if I look at a landlord who's sort of whose maybe income is also dependent on our rent, it's sort of a two-way street, right? And at some point of time, we've sat down, but we've seen what we can and what we cannot actually play with. So a few of these expenses, though we would have liked to cut, we've taken a call not to, because we felt that the need of the person who's on the other side is actually greater than ours. And I think it's a very hard subjective call, but in this period, I think it's up to all of us to sort of figure out where the leverage. One is, usually people look at leverage. The other aspect is who's the more privileged one today. And in some cases, you may have to take the hit. Like there was this, like I see a lot of these enterprises, and I think the Facebooks and the Amazons of the world are doing the right thing. But a lot of these age-old enterprises that I see, looking at salary cuts, etc., when they're making $1 billion of profits every quarter, this doesn't make any sense to me. So I think how you build out your organization, if you're an existing brand, it impacts you a lot. But even how you build out your own culture and how you react to this situation is what culture you're going to build in the org. And therefore, we've been a little cognizant of what our employees take away as what the culture of this organization is going to be. So we're going to take the hit on the P&L and not reduce any people or have any salary cuts as such. But in the end, that's because we feel that this is the period where the company has to take the hit. And hopefully it will sort of get rewarded long term when we sort of build out the business post the situation ending.
Thanks, Grant. Very interesting perspective on culture. We at Amazon always believe that culture is the backbone of an organization. And glad to see, this whole thought on being privileged and, making sure that we look after the underprivileged ones. Glad to see that thought. Let me move to Anirudh now. Anirudh, for you, the issue might be a little bit different. You might be seeing a little bit surge in traffic, if I'm right about this. So good to get some opening remarks from you.
Yeah, look, like I said, our mission is to solve boredom, and for a lot of households today and a lot of individuals today, boredom is what they're dealing with. So our mission is more relevant than ever before, and we also give voice to a lot of feelings that they have. So we have to also make sure that we're representing them pretty well. So I think it's again made us focus on what our basic mission is. I think from a point of view of predicting the future, none of us are epidemiologists, or we're not, economists or whatever, right? So the best you can do as a company leader at this point is really to focus on scenarios, right? And what is your response in these different scenarios, and be vigilant enough week on week to realize which scenario you're in and whether situations are changing. So I think, whether you're in a V-shaped recovery or in a U-shaped or an L-shaped, we don't know. Right? All L's are U's finally, right? So how big is the U? We don't know. So the point is that I think it's not a good time to play predictor. So I think, don't try to play predictor, just have enough work done in different situations. And that's what we have done as well. And again, we're lucky that we raised around last last year, and so liquidity is good, and there's no issue for us in terms of survival. But a lot of our peers are facing survival issues, and we have to be mindful that obviously from an economy perspective, this is a very difficult time, and an economy is a circle, right? So you cannot grow without your supply chain or your ecosystem, as Revan mentioned. So I think you have to be very careful about completely busting your supply chain or your vendors. So that's something that you need to think about and invest in if you can. And given that maybe your revenues will decline right now, is probably the best time to focus, like Vivek said very rightly, on your product, right? This is the time that the most valuable resource you may have apart from cash is time right now. So use that time towards creating a better product. So for us, those are the ways we are looking at doing things. We launched, a major update to our gaming app Loco, where you can now stream live, and there's game streaming available, which is a huge project to launch when nobody's actually in the office, and we are seeing great uptick there. The content side is of course seeing great uptick, but large shows can get impacted, right? Because you cannot actually shoot. But people are finding new novel ways of shooting with their grandmothers and with phones. And that was part of our culture before. So that's again re-emphasizing the frugality of how you can create content at this time. So yeah, it's been a difficult time. Around the world, when I look around, it's a huge, grave human problem. So we should never lose sight of that while dealing with this. And, I always think abroad, like, take people, then look at cash, then look at revenue, and then look at opportunities, and you have to see in those buckets.
Yeah. A great point. That if I can just ask you, like Vivek spoke about, cutting down marketing expenses, and, basically this whole debate on what should I do? Should I just sit on cash? Just compromise growth totally? Should I balance it in a way? What and this is very relevant specifically for a lot of early stage startups. So what will your advice, or what are your thought process will be if you were one?
My personal view on this is your company is different from my company, and your vendors are different from my vendors. If you are negotiating with Google or Amazon, they're in great positions as companies, and they may actually help you because they want you to survive as as someone that they do business with. So you have to be careful about which line is more important to you. If you are a business where marketing is really critical right now, you may have to spend those dollars first and maybe take some salary cuts or give more ESOPs to people, right? So I think the solutions will be different, but the process is all going to be the same, which is you look at your business in these different world conditions, and from there you will find which is the highest priority, must protect kind of investment, and on the other side you will find the highest priority line item to cut, right? So the simplest could be if you're in a co-working space and you just are not using it, so what are you actually paying for, right? So that is a place where you can go back and renegotiate, but that may not be true for some of the other guys where some of your suppliers who are supplying you maybe the meat or whatever packaging. If you bust them, then you will have no business coming out of this either. So I think it's not a one size fits all type of answer, and I think the worst answers are on the corners, right? You cannot go completely gangbusters and say, okay, we're just going to spend 100% on marketing because the world is weak today. But also the other side, which is I'm just going to sit on cash, means you'll have no business when you come out. So you're like literally a zombie business. You just have cash. So you look like the funds that are funding you.
Fair enough. Let me go to Farid now. Farid, obviously you're a video sharing social networking service. What are you seeing, and how are you guys traversing this whole period of uncertainty?
Right. I think I quite agree to all the comments made by Anirudh, Revant, and Vivek. But I think in the nature of our business is quite different from everyone else's. So we are seeing an organic increase of 20 to 30% in the time spent on our platform, and which apparently is the most important metric for any social networking platform to track, and how much time is a user is spending on an average on a platform. So we are obviously seeing an organic uptake as people have more time to spend. And hence, there are a couple of things that we have done to plan our way around this. Of course, this when you have these kind of sudden jumps, what happens is that your budget goes for a toss. Like we have 60 million monthly active users, so that's a lot of server costs, a lot of ransom money that goes to AWS and GCP. The way to look about it is that we've made 3 different parts of this problem statement. The first being around the fact that since people are spending more time, they're also becoming more experimental. They are also trying out new things, trying out new apps, and they're also trying out new features within the existing apps. So that means, and since our company has a philosophy of having a product market fit is actually a sum up of multiple feature market fits, and that's how we define a product market fit as. So it's a good time to experiment on as many new features as you can for a social company or a content company. Like as Anirudh pointed out, that in Loco they are they have started piloting with game streaming. So I think those are the kind of things that all content and social companies should do at this point, and we are also doing a lot of such things right now. So that's the first track. The second is on reducing cost, but as I said, the nature of our business is very different from all the other businesses here, and majority of our cost goes to servers, and since the time spent is rising, the user growth is rising, you effectively are spending a lot more on your server costs than you were in normal times. So that leads to a second track of things where we are now optimizing things much more deeply in the server. And since we have a lot more time on our hands, people are not wasting time going out for chai sutta breaks. People are not wasting time discussing things at length. They know that they have to jump from one Zoom call to another Zoom call. They have to get code shipped, and they have to solve for the OKRs that they have picked up for this quarter. So that in effect is allowing us a lot more time to focus on maintenance work, which might go for a toss for in the normal scheme of things. Like for instance, I think in Vivek's case, maintenance would probably mean refining the product. In my case, maintenance means refining the server infrastructure and refining the cost that we spend on every single content that we serve. So that's the second track that we've been working on. And the third track is as what Anirudh also mentioned, that you have to keep rethinking every 2 weeks, keep plotting 5 to 6 scenarios on how this this pandemic would fare out, how India would come out of this, and what all industries might be impacted. And then based on those 5-6 scenarios, reevaluate how much money you have to allocate to the various verticals of your company. You just can't say that the formula is that let's cut our marketing, because for instance there might be some companies who have been working really hard are in the earliest stages for the last 8 months and are on the brink of breaking out, and they are probably not e-commerce, probably not dependent on delivery and logistics, probably are a dating app or a quizzing app or anything of that sort. And because the eCPM rates in India are very low right now, it's actually the right time for them to press the pedal. Of course, funding environment would become very difficult going forward, but I still believe that the crunch, it also trickles down. It trickles down from growth rounds up until early stage, and the crunch, it would be seen the most at the top, of course, because the biggest travel players and the lifestyle players are going through the struggle, and a lot of money has gone into them. I won't take the name of the large funds, but you get the rift where it is going. So for the earliest stage companies like pre-seed or seed or Series A, probably it's they can be strategic about it and time they're spent, but they should leverage this opportunity. We on our hand, we are evaluating our feature market fits, and as and when we are seeing certain feature uptake, let's say so for us, since we are available in like 15 languages, we are sort of like a compendium of 15 social networks stacked together in 15 different languages. So when we see a feature uptake in one particular language, we would press the pedal in that language, but we wouldn't press the pedal anywhere else. And of course, we are already seeing significant organic uptake. So it's not a burning need for us. What's more important for us is to make sure that we are not spending on a moonshot a lot today. maybe we can, the thought process is that, trim down the moonshot to the most minimum viable product, minimum viable feature, and then, just test it out, because there is enough adoption and people have more time than usual to test out whatever feature you are testing. And, that's the thought process with which we've been operating for the last, 1 month or so now.
Thanks a lot, Fareed. Yeah, it makes sense. So I think the takeaway for me are obviously, that every business is different. So look at, you got to find your own areas. For someone like Vivek is saying cutting down marketing expenses makes sense. For somebody like, Pocket Aces, and for you, ShareChat, it might just make sense to do more experimentation. And look at your products. I think Revant spoke about a very good point on, use this time to focus on your product, make it better, earn the trust of your customers, and obviously the culture piece, which I love. Okay, let me just switch gears. Let me just go to the next question. And Anirudh, I'm going to start with you here. This one is to do with, the things have changed. We right now doing this whole panel on a video conference, right? I mean, Fareed spoke about, jumping on one Zoom call to another. Has certainly been my life for the last 15 to 20 days. And with this, it also becomes very difficult. One is, how do you maintain employee motivation? How do you get them used to this new way of working? How do you keep them energized and keep them focused? Because that's extremely important. Because the task was not disillusioned. And so it'll be good to get some pointers from you on how you're doing it, on the whole communication plan, how you communicate. For example, in Amazon, we've taken, what we're doing is we're kind of over communicating right now, so so that we have weekly, twice a week stand-up calls on Chime. We also having some virtual drinking sessions, to be honest, so things like those, which, get all of us together. So what about, it'll be good to start with you, Anirudh, and get your perspective there.
Yeah, I think as a leader at this time, you must be front and center, right? So you cannot be sitting in a high tower and sending emails only, right? They have to see and feel and hear your voice. And I think it's a good time to be transparent as well. And, I don't think it's a time where it's not just another crisis, I feel, right? Like, this is not, it's unprecedented, some of the things we're seeing. So I think people should know that. But that also means that they're only reading negative news all the time, right? So every time you put on Twitter, like, if your motivation level is at 100 or happiness level is 100, it can drop very, very rapidly, right? And you might be working on a creative for a banner, and you're like, is this really important when 1,000 people just died today, right? Those are kind of questions I think you must handle, because providing that the positivity and providing care at this time is important. So, for example, we have invested in multiple sessions from a company called Inner Hour, which we've worked with in the past. And so people have access to therapy as and when they like. And in fact, funny enough, more people have started signing up, and they're doing it remotely. We have done yoga sessions, which are being done from using Zoom, and lots of people are coming into that. We did a COD tournament yesterday, which was actually broadcast live on Loco, right? We have stand-up open mic night soon. So those things you can still do. And actually, funny enough, people are craving interaction now, right? So our Zoom calls and our Google Meet Hangouts, the kind of responses we're seeing, I have not seen that kind of response before. Like at our recent town hall, this was the highest attended town hall, I think, in the recent past, which just shows you people, there are many positives to this. And I think, I forget who was mentioning earlier, but there may be permanent changes in how we start doing some of these things. And so I think, doing some of these activities is important, and not taking a negative view on them, because sometimes that can happen. You're like, kaun attend karega ye, nahi aayenge log. I think you just have to be positive and just have more faith in your people there. And then in terms of work itself, I think just having more over communication is completely fine. But I think also people are finding the new normal, right? So just give them some time to find that, right? So it may not be that you may not need meetings for everything, right? And you will start protecting your time maybe a bit better. You're also getting maybe 2 hours, and if you're in Bangalore, maybe 4 hours of travel time back. So you're utilizing that to do other things. So I think giving that time is important to just adjust to the new normal. But other than that, at least for our company, we've been lucky because we don't have so many offline elements to our supply chain right now, which are at work. So the communication has been good, and everyone's very open to using new tools like we are right now.
Thanks. Yeah, yeah. I think this whole thing about not being overtly negative, be positive about this whole thing, and I think people do realize and people will respond. Um, what about you, Vivek? If I've, for you, it is also, one is your employees who are working on the tech side, and but there are also people who are, on the delivery side. And how do you keep your workforce motivated?
I think, Sachin, more than just motivation in our case, because our backend is working, safety becomes very, very important. Safety first and business maybe second, and third, you can say livelihood. So we have taken very, very sharp measures on our employee safety. For example, all our people who are working in processing plants have been given hotel stay by us. It's a quarantine facility where these people are given 3 times food, proper stay, etc. So those people commute just between that hotel and our processing plants. This we have done across all the locations. So if you set these examples right and make sure that your people are safe and this travels between the community, I think people get the confidence to work during these times, because it is very easy for them to take a call that we will sit at home, right? So that was our first step we did. Second is, as Anirudh was saying, you have to be transparent, and we have also added be fair while we are more transparent. For example, just before the COVID lockdown, our performance management system was appraisal was going on, and everybody was eyeing us that what call Licious will take, will we, pass, will we stop, or what do we do? And at the other side, we are saying that there is a tailwind, and post COVID and during COVID, there is a demand which is going up. So, after a lot of debate, we have taken a call that, we will continue and do the regular appraisals, right? Because appraisal is not that momentary call, it is last 12 months what people have worked, right? Obviously we I don't advise all companies to do the same, because they have to keep cash in the bank in their mind before they take any such calls. But so that is a stand we have taken. So keep the environment very positive, be fair, transparent. And the third thing we have done is engage regularly. So what we have figured out in engagement is all people have some creative streak within them, right? So we have invoked that, and many of us internally are taking like half an hour classes on some unique thing, and people are participating. Starting it is music to cooking, and to everything which is happening live within the company. So engage, over communicate, transparent, fair, and safety is the key one messages which we are following at Licious.
Absolutely. Yeah. It'll be good to know your creative streak, Vivek.
Yeah, I can give gyan on finances, man. I am actually also spending time with the in companies where I have invested personally. How do you, because those are very early companies, and they have to, maybe some of them were getting ready for fundraisers, etc., etc. So I'm doing that work also. Making them ready. How do you manage with a very little cash flow, and how do you pass this 2020?
Yeah. Yeah, great points there. I think you touched upon a very interesting topic, and I'm going to go to Revant, you now next. And, this very similar question, but a little bit of twist is, a lot has also been spoken about not only your physical well-being in this time period, but also your mental strength, and, how you mentally stay healthy. And, being a leader in the midst of, creating a new business, and all the tasks motivating your teams and energizing them, keeping them focused. It's also important for you to have that clarity and keep your yourself absolutely picked up. So it'll be good to see what, personally, some of the things that are you doing to keep yourself, keep yourself ahead of the curve, Revant.
That's a little tough question, Sachin, honestly, for me. But I'll try and answer. Honestly, I actually take a lot more stress than I think most people I know do. Maybe I have some. I mean, a lot of people have told me that's because I have OCD on a lot of things. Right, I'm always seeing some problem to solve. As Vivek said, I'm an investor in almost 10, 12 companies, and I spend almost a couple of hours a day also talking to some of those founders. In some way, but once you sign up for being an entrepreneur, you are always an eternal optimist, right? I think if I hear everybody on this panel, I know in deep down, all of us are facing some issues, but we are looking at the positive side. We are looking at what can we do in this situation that can improve our business. And that's essentially what you sign up for when you become an entrepreneur. You just cannot be weighed down by anything that is happening around you, because in the end, it could be the minimum of 5, most likely 10. If things go great, then a 15-20-year journey, right? And I passed out of B school in 2009. Half my batch went to PSU, so I actually sort of been through this once before, and I was actually on the recruitment cell trying to get more companies on board. And I think since then I've sort of become even more an optimist than ever, right? Because every situation will have to come out stronger, and somehow that has sort of translated me getting into a daily all hands, and every day in the morning I talk about every good thing that happened yesterday, because I have visibility to all functions. And by the end of the day, we have daily morning and evening scrums, and in the evening scrum, when people sort of note what they have been through, what they have done, what have they achieved, I take it up personally to sort of inform the entire organization every day as to what positive things we learned yesterday. And somehow I realize that sort of is very critical, because I can see that, because I'm an eternal optimist. Being the CEO, I have to be that. But somehow I want to instill that culture into each individual in the company as well, because as Anirudh said, most every hour you are hearing something which is just petrifying, right? People are worried about their own health and wellness. They're worried about the fact that if you're in a business that is dependent on consumer demand that may not come back for 6 months, what are we really working for? Is my ESOP going to be valued? Am I going to get be in this job? Am I going to get a salary if this continues for 3 months? It's playing on people's mind. They may not tell you that, but it's always playing on their mind. And trust me, having no permanent maid while doing the work and washing dishes and actually doing the household cleaning, it is actually stressful. I agree with Anirudh that we have saved 3 hours a day of travel, but there is 3 hours a day of additional household work as well. And my 4-year-old kid is just bored to death, because he's not old enough to do online classes. So there is enough stress in everybody's life, but somehow I think as an entrepreneur, you have to remain an eternal optimist, and that's essentially what I try to do. And I never was actually a big communicator with teams, but this situation has forced me to do that. I think it's a good thing that I'm learning. For me personally, as an individual, I was never good at one-to-many communication, sort of inspiring folks. I think I'm pretty poor at that, but I think this situation is sort of forced me to do that, because I'm always worried. And I think the daily morning scrums also help, because we actually have a emotion tracker as well. Daily morning, people have to say whether they're happy, satisfied, stressed, worried, or etc. And as soon as I see 1 or 2 stressed, my phone, I reach out to my phone and call that person and said, "Tell me what's your problem for today," right? And half the time, as CEOs, honestly, I know all of us work hard, but essentially we are problem solvers. We don't do much. We sort of, hopefully, our job is to get out of our team's way, but also to inspire them and motivate them half the time, right? So solving for their problems is essentially what is our number one job, and that's essentially what we do day in day out. And I think that this overall over communicating is something that I have learned, and I've been in various leadership roles for the last 10 years. Never have done that, and I think this situation, again, I'm looking at a very big positive that I have learned, and hopefully I'll carry through post this situation as well.
Very interesting thoughts. I absolutely echo what you just said, and spreading the good news is so important at this time because there's so much of doom and gloom all over. We need to really hear the good news, and I'm sure we all from this will acquire a lot of new skills, both professionally as well as personally. Washing dishes or or something similar. So let me just switch gears, and let's just fast forward ourselves and see we come out of this. We will come out of this. I mean, humanity will come out of this doom and gloom, right? But when we do come out of this, and it'll take a lot of resolve and resilience, from all of us as human beings, as business leaders, to really come out of this. But I think what the world will obviously look a little different. The last panel also spoke about it. When we come out of this, for example, and let me be a little bit more provocative. I think Siddharth also in the last panel mentioned that this whole in the startup space, the whole model of burning cash perpetually without generating profits, will not be in vogue anymore. So yeah, I think people will look for business models where you can self-sustain yourself. That is one part of the story. The other part of the story is I think some business models will also change, if not get destroyed totally. I think there was a healthy debate, in the last panel about what will happen to, with work from home certainly becoming more and more prevalent, and companies being more flexible pro-COVID era. What happened to the co-working spaces? What about ride sharing and things like those? I certainly can tell you, for me, when I look at my wardrobe and I'm thinking, why did I even buy all of those things? I think I'll certainly start spending less on my shoppings and probably move to a minimalistic scenario. So
I doubt that, Sachin. Right now, I'm sure you're wearing shorts right now, and that's why you're feeling that way. But I don't know.
I'm wearing jeans, Ravant. Okay. Yeah. So two parts of that question. One. Can you guys hear me? I just felt I got rebooted. Sorry, I got thrown out, and I'm in. Okay, perfect. So the two parts of that question. One is what are some of the trends that you guys think will emerge out of this in the pro-COVID era? The other is as business leaders, as you come out of this and return to the normal world, you also have to reimagine a lot of things, because the next normal will look different in terms of the market, the way you do things, and also I think the regulatory frameworks, because I do think some of them will change, some of them will evolve, and so on and so forth. So it'll be good to get the perspective on how are you guys thinking about it. Are you thinking about it? Are you planning ahead of it? And how are you going about this whole situation? So let me just start with Vivek this time. And we was talking about regulatory frameworks and things like those, and you spoke about safety. I think that is one area where we would definitely see more coming in few years. So Vivek, your thoughts, please.
I think Sachin, different businesses will see a very different kind of outcome post-COVID. Okay, so let us pick up a couple of them as an example. So I think offline retail will take some time to revive. To be specifically, let's say, dine-in restaurants can take a slightly longer time. People may not prefer to go to those kind of things. Crowded malls may take some time to pick up. So that also, may push people to buy online. Now, whether people will avoid discretionary spends, like you were saying, your wardrobe, and prefer spending money on essentials, that I think time will tell. But sense is that people will be slightly careful in their spends. That also, I think it will differ different geographies or different cities will behave very differently. People who are in, let's say, large IT sector in cities like Bangalore, I think they'll be lesser affected because global companies can, manage their cash flows well. Whereas tier two cities may behave very, very differently. So companies like Essentials and specifically online, and when I say essentials, it is not only meat, it is many other essentials, right? It is medicines, or it is also groceries, and many other things which people consume online. I think all these industries will see tailwind, and that tailwind can stay for longer time. Even the online content consumption, everything, I think will be slightly growing. Work from home should become a more habit or part of the culture of the companies, and at least for next few months it will be there. So to companies where they don't have too much of cash, etc., and let's say if they have to choose between growth versus cash, I think no growth is not a scenario, boss. If people choosing that they will not grow, I think, as Anirudh said, they will become zombies, and I call them living dead companies. So I think fundraise is going to be very, very challenging. So I think the better mechanism is, what are the top 5 metrics which investors will look at when you go for fundraise post COVID? Okay, at least try to achieve them in a sustainable way. So maybe step by step, keep going towards that growth rate. So no need to grow maybe 20% month on month. Maybe the new growth rate can be 5%, which is also a sensible growth rate to achieve. People will understand that kind of growth rate, and founders should, and including us, founders should continue working on achieving those metrics with as little as cash spend as possible, depending upon their businesses. Whether if there is a tailwind demand in the system, then why marketing? If you have to still build demand, I think maybe a redesigned marketing is an important one. But no growth is no scenario, because then no funding for sure. And 2020, I think even investors may slightly take time to bite newer things. So that behavior, I think, is your guess versus my guess. So maybe 2021, maybe things should settle down and people can get again look at funding. So we have to survive, all of us have to survive during this time. But don't take maybe knee-jerk reactions in anything. Take a step back, think what is required, what is not required, and do all the right things during this time is very, very important.
Yeah, and I wanted to just add one thing to what Vivek just said, which is, don't design only for COVID, right? There's this, I've been getting questions on my Instagram, etc., where people are saying, oh, like, will VCs want something which is COVID related, right? The reality is, if you have something which can come out tomorrow, possibly, and I think not only the VCs, the rest of the world will support you in that. But usually product cycles take time, and by the time you may come out in a post-COVID world. So I think getting fixated on the short run is not good for any business, right? The value of a business is in the long run earnings potential of that business, and don't let the markets just tell you what the value of your business is, or just any VC tell you what the value of the business is. You will create that yourself, like Vivek is saying, and don't. I think it's not helpful to get waylaid by just short-term things that are happening.
So Anirudh, if I were to, I think you made a very interesting point, and that was the essence of my question too, in some sense.
Sachin, your voice is very feeble, yeah.
Is it better?
Yes.
Okay. I just have to take it every time out and put it back. It works. I don't know how, but it does. Okay. So Anirudh, coming back to you, I think you made a very interesting point, right? And that's the essence of my question also was. So as a leader, how much time are you spending in looking at what the pro-COVID world will look like? So one is getting through this, and getting, getting out of this strong, but also what that world will look like. And should I go back to the drawing board? Should I look at certain things and aspects of the business and redesign them? What percentage of your time are you spending in that versus current traversing the current situation?
Yeah, I think I'm probably spending 20-30% of my time on that. But see, it really depends on your business, right? Like Vivek said, and the other guys have been saying as well, which is for our business, the changes look positive. So it's more about how do we accelerate growth without breaking the machine, right? What kind of experiments can we run, right? How do I know this is real, right? How do I know, like Farid said, that this is actual, a feature market fit or those kind of things, right? How do you evaluate that? So that's where your time is being spent. But if you're an online travel company, the world may look very different for a very long time, right? So it's very different depending on your business, because some businesses may not be affected. If you're an early stage startup, I think you don't have to worry so much, because you may be just, unless you're running on a runway, but you may just spend much more time on product and really focus on that. So I think, really looking at it as a, this is what the world will look like. I don't think you should be spending too much time on that. I think it's much more about, if you are in a field that could be helped, like telemedicine, yes, you should be really thinking about, because your customer behavior has changed drastically. So finally, it just comes down to that, right? Do you think your consumers' behavior or your customers' behavior is going to change drastically in a post-COVID world? And what do those scenarios also look like, right? Some of them may be, we are saying that people may not go back to restaurants, but they may, I don't know, right? Because I may miss it too much and I just go and eat, right? And everything becomes the same. I don't know. But the supply chain may not support that. The problem is that in predicting the future, there are too many factors you don't know about. So I think you just see, is there a fundamental shift in consumer behavior? And if you can, then you can create new businesses or really accelerate your business. But for us, we're spending 20-30% of our time on that right now, I would say.
Yeah. Seems like, so I think what I'm hearing is, don't be overwhelmed with it, but do spend some time looking at those trends and, how things will look like, going forward. Moving to you, Revant, for your thoughts on this.
So I think any entrepreneur should look at it in this particular order, right? I think first thing to do is get your company to have a 12 to 18 month runway, minimum 12, hopefully 18. Once you have done that in all manners possible that we discussed on the previous panel, as well as a little bit on this one, look at the end of that runway, when you have to start fundraising, what does your business metrics need to be, and how easy or difficult is it going to be based on some consumer behavior change, right? And that may happen a little bit, and therefore does your business need a little bit of a tweak? And that's where the opportunity versus what opportunity you take between the multiple that may open up may come in. The third could be that, as Anirudh mentioned, you could already be in a business like Farid is in a great business, which already is seeing an uptick, right? And there, once you're factored in the runway aspect and the metrics, so that's secondary. It's more about what opportunities do I take up, so I create a larger gap between myself and the other peers or other companies in this sector, or the other threats that may come in. Because as Farid mentioned, Facebook CPMs have come down by 1/3 to 1/3, in fact, of what they were, because nobody's advertising, right? I think e-commerce used to be the biggest spender in India, and right now nobody in e-commerce is actually spending $1. And therefore there is far more supply and of course, simultaneously you have people logging in and spending so much time on every social channel. So CPMs have come down, but does that sort of give rise to someone new? And therefore that's the third aspect. So I think in that kind of priority, every entrepreneur will be looking at their business. For us, we solved first one. So that way, as I said, we are privileged, we are okay. On the second, what we've done largely is there were a few elements of our business that we wanted to try and do, which involved telemedicine, because we're in wellness. Luckily, the government actually moved pretty fast as soon as the lockdown hit, and they sort of came out with guidelines And we already had doctors empaneled with us, and therefore we sort of started telemedicine as soon as the guidelines came out, right? And that is something that we would not have done unless the situation had hit. So how do you react to, and see, it's an experiment today. We will also learn along the way. We had no view on how this could be done. We will learn. Luckily for us, doctors can be remote. The patient is already remote. Technology is allowing everything remote. So, everything can function. The aspect, and this sort of compensates for the aspect that is not working, which is warehousing and delivery. Even though actually we fall under essentials and we can deliver, we've chosen not to do so because we don't have an answer yet. I think what Vivek has done is commendable, is how do you make your workforce safe and not put them in harm's way. We really didn't have that sort of a business today to even understand how do we do that, and we didn't have a lot of staff. So we just said, you be at home for some time, we'll figure out, let this pan out, and it's okay, we can launch after a month. It's not that we have $100 million GMV to protect that will sort of go down, right? So I think some of these are situational aspects. As Anirudh mentioned in the beginning, every business is different, but I think the fundamentals don't change. First step, make sure you have 12 to 18 months runway. Second, look at the metrics that will help you raise your next round. And those metrics will sort of get redefined a little post this situation, as well as does consumer behavior lead to new opportunities coming up. I think in that, look at their sorry, can you hear me? Yeah, every entrepreneur should look at their options and sort of go from there. Because I saw a few questions already popping up, and I think it's very hard. Like, I would not recommend anybody pivot their entire business looking at this as an opportunity to say, oh, what can we do now? Because fundamentally, it's just hard to get product market fit when there is so many broken things right now. You may sense an opportunity in X, but creating businesses is not about an idea or having 3 months of great traction. Creating a business, actual product market fit for any business, and we have, every founder here is a Series C+ founder, right? I think we, all of us would be, and I've been in a business that has reached that stage. Hopefully we'll reach there again. It takes a minimum of 12 months, most likely 18 months, for you to see actual product market fit for any sort of new idea. So execution is something that will just take time, and therefore it's not wise to try and pivot an entire model or come up with creative ideas that you think is just for this COVID kind of situation. Yes, new consumer behaviors, we'll have to wait and watch how they pan out.
Yeah, fair enough. I think Farid, your last comments, and then we have questions are coming in. We'll take a few of the questions for the next 15 minutes.
Yeah, I'm just adding on to Revan's point. This is the scenario for a lot of startups is very similar to what happened post demonetization. Pre-demonetization, we did not have as much adoption of wallets and payments mechanisms across the board. And of course, the usage frequency takes time, and it takes a lot of work. Like, it takes a lot of work post adoption for the company to make that happen. But adoption baselines change after such events, and I expect, as a company also, we expect that there will be new baselines that would be formed for consumer behaviors, and it will, all those baselines can die, and we can go back to the same pre-COVID situation in the post-COVID world. But it's all up to the companies to leverage those scenarios, leverage those situations, and build on top of those new baselines. And those baselines would definitely be different. Like, we are already seeing, difference in how, what is the average time length of a general video that a user posts on the platform. Like, a short video is no longer a 30-second video. A short video is now a 90-second video, and that's a new baseline on which you can build on top of. So there will be those new baselines which can look as headwinds, but to convert them into real consumer behaviors, it will take around 5 to 6 months for any company, whether it's social, e-commerce, or content, or across the board.
Yeah, I think great overall, great great insights. I think there's one question that's popping up in a lot of ways, and I'm going to put it to all of you, and you can add is, I will just simplify it, but the number of those questions, which is, with the same sense, is, people are asking, how do you prepare for this, 3, 6, and 9 month period, 3, 6, 12-month period? And, because it's extremely uncertain, it seems to be the sentiment. I think, Revant, you spoke something about the basics won't change, right? I mean, look at that you have a runway, look at the metrics that will get you next round of fundings, and so on and so forth. But would you guys like to add, or, there seems to be a lot of people asking a similar question.
I mean, the answer, honestly, whether it's 3, 6, or 9, is for survival. I think, and that's what the first priority for most people would be. I'm sure enough has been said about that across different VC forums and different webinars. But I think, I mean, it would be hard to predict how long this would last. And even if there is selective removal of lockdown, I think this will, I mean, if anybody's guess, could be 2 months, could be 4 months, could be 6 months. Economy could go into a different shape, and you never know. So survival is at least a 6 to 9 month piece. I actually have a contrarian view. I think by the end of 2020 or maybe early 21, if and when money starts flowing back to the world, some optimism comes in. I actually believe India will see the maximum amount of money coming in. Fundamentally, I just believe one thing that this year will show, and maybe it's me being an eternal optimist, is trust is something that is where a lot of private capital flows, and India will show that. I mean, just if I look at what we've done with ACT, which is the 100 crore fund that we have set up just for enabling businesses to look at how we can sort of answer COVID. I think the pace at which we move, the camaraderie that we have in the startup ecosystem, I fundamentally believe is going to sort of shape itself in a very, very positive manner. And we may see a significant amount of capital inflow when things turn positive. I don't know when it will, but I think India will start seeing a lot more positive sentiment globally once we come out of this. So I think if you can survive and not be very, very, I mean, the second aspect, honestly, is that existing businesses which may lose out on some GMV revenues will have to live with the valuations that they get. I think it's just hard for an entrepreneur to fathom that, but we've seen that multiple times. Flat rounds are going to be okay. We just have to get to that acceptance levels. It's going to be hard for anyone to of course, some businesses that benefit out of this will get, like yesterday we saw Notion raising at 2 billion. It is an obvious response to the fact that it is getting used more and more, and the MAUs have gone up. But fundamentally, I think if you look at it, the positive end of it, I think if you can survive the next 6 to 9 months, any business, you will come out much, much stronger. And as I said, most entrepreneurial journeys are usual 10-year journeys. In the 10-year period, these 6 months will look hard, but at least you'll look back and say that you did a good job in sort of just surviving and getting through this.
Yeah.
I just want to add one small point, on cash conservation. I think during this time, founders are also advised to maybe make use of, innovative ways of raising debt and make, life of your cash longer. As Ravan said, I think 12 to 18 months is a good period that we should wait and watch. So, we were talking with Ishpreet also yesterday. Gone are the days, where debt was only given to the companies who have large equities. I think there are very, very smart ways of creating leases, getting your receivables discounting, collection discounting, etc., etc. I think that can be another thing founders should look at.
So would it be fair to say that you guys will look at venture debt and even, debt from banks also, right? As a fair mean of, as was said in the last panel, with equity, can you blend it together?
Yes.
And is that
everybody should look at, depending upon their cash situations. We actually fortunately just ended up raising money in November, but there is no harm in just extending the runway during this time.
Yeah.
Yeah, debt with the right kind of moratoriums and interest rates. I mean, effectively, if you, I think there is debt available in the market that sort of doesn't really give you a runway because your moratoriums are less and your repayment cycles are such that if you have a 12-month cash, you will effectively end up maybe making it 14 months. May not be worth it, but if you can extend your runway from 12 to 18 by taking that, then absolutely it's a no-brainer to do that.
No, Rivand, I was also adding on to just not extending the runway. So for example, if you have to invest money on your infrastructure, let's say fixed cost, if you can get it leased, your vehicles, for example, rather than investing your equity money, get it leased from outside. I think those are the smart things founders can do, everything consumes cash.
Yeah, great thought.
Yeah.
Okay, I think the varied question I'm just picking up from the chat window, few of them that seems a little interesting. There are questions about will after COVID, the world will look at India as a manufacturing hub. Do you think the scenario will change or will it benefit India positively?
I mean, first depends on manufacturing opening up again, but hopefully it will open up and we will. I think if I look at some sectors already which are a little dependent on supply from China, and really is a little bit of a regulatory play here on, how soon do we start imports again from China? We know factories in China are back live, but borders are still closed. So if the regulation of the government decides that the borders need to be closed for maybe 6 months but manufacturing locally should start, we may see. And India, I think, is a very entrepreneurial country. I mean, given an opportunity, people will make sure that they will sort of produce enough so that our supply chain, etc., keeps running. But I think a lot depends on how the government will play out on this. Given an opportunity, I think yes.
Yeah. There's another question. It's an interesting one, which says, so there's a young entrepreneur who is working on their ideas and is doing to this immediate shutdown. The work has been stopped. So working on something. You're a young entrepreneur. What should they? How do you think they should be getting back, and how much it will affect their pace of work since the situation won't be same as it was 20 days back? I mean, even if you can answer, it's not directed. Most of the questions are pretty.
Sachin, can you be a bit louder, please? We are not able to hear you.
Okay. Can you hear me now? Or should I plug and unplug again?
Yep. If you can do that, that would be great.
Is it better?
Yes.
All right. It's crazy. So, yeah. Do you want me to repeat the question? So the question is, what would you suggest to a young entrepreneur who is working on their ideas, is pretty much in the inception stage, but, due to this immediate shutdown, right, the work is now stopped, come to a halt. So what should they do? I mean, should they go ahead, should they just wait? What will be the advice to somebody like that?
No, I think I'll take this one. If you haven't raised debt or equity, and if you are not too tied into the idea, maybe it's good time to pivot. In case you have raised debt or equity, maybe you need to have a chat with your investors and pivot. In case you have not, in case of let's leave debt and equity aside, you are not struck on the idea, but the amount of work that you've done has led to certain intellectual property being formed, which you want to leverage. You probably need to find alternate avenues that your eventual product would have. Probably, for instance, if I take the case of these recent companies, OK Credit, Khata Book, if some of you might be aware. Because they were dependent on real world commerce, they were taking into account real world commerce into their apps, and now there's no real world commerce happening. What do these companies do? I think one of the things that they can do is start probably working on content and engaging their SME SME users with content which is meant for those SME users. They have a targeted demographic within their system already, and they can provide them something which the MSME users need today. Probably eventually, let's say 3 years down the line or 4 years down the line, these guys would have done financial content in any case. So, whatever you have in your roadmap for the future, which can be put in today, which can help you grow the business, probably focus on that. But in all cases, if you're not really in love with your idea and not really built an IP so far, not raised debt and equity, you have time. If you're a young entrepreneur, you can think more ideas. You're probably looking at a 40-year landscape for building companies or building one company. So you have enough time. Like, this is just a blip in your entire journey.
Anybody wants to add? Then I have a last question. We are almost at the time.
I mean, just one thing I'm actually surprised with, like, apart from factories being shut and us not able to do product development, let's say, or logistics for non-essentials, I think everything else is fine. Content generation, there are freelancers who can write content, there are coders, designers, everything is functioning. I actually am pretty happy to see that most people are actually productive, because I mean, apart from something that actually requires a physical good to be made, I think I was actually pleasantly surprised to see how far and well digitally optimized we are today as a country. So if your business does not require a manufacturing or a physical asset per se, you could actually continue to do your work remotely as well. And if it's a question of money, that's a different, but that doesn't seem to be the problem. It seemed to be a question just of whether should I still continue to work on that, and if you can remotely, then why not?
Reva, do you think service industry would be affected, like agencies who are, like, there was a question around someone who runs a design agency. I think for them it would be a different scenario, because people would be cutting their marketing budgets and hence cutting their advertising and hence cutting extra services that they're onboarding today. So what are your thoughts on those kind of businesses?
Yeah, that's a hard one, because I think it would be an 80-20 rule, where I think 80% of your income is coming from 4 or 5 large enterprises or large clients, and I think the larger businesses have shut most of their spends. And now really depends on how people are looking at this. Maybe there is a possible alignment. Like, I was talking to someone at Indian Express yesterday. They manage, and they reached out because they said, even though our core ad business is shut, our users have increased a lot, and we are trying to see if we can do something interesting. And what they're doing is they're sort of creating live sessions where they're getting experts to talk about different contextual pieces that are relevant now, and getting brands to just associate in a way where they are considered at least top of mind positively, even in this overall scenario. So I think everyone will have to find their way a little bit, especially, you're right, service businesses which are dependent on other organizations to spend on marketing will sort of take some hit. But you need not go down to zero. I think a few of them will still be looking at different avenues to be relevant, or at least either create content or associate their brands in the right manner. And I think that's sort of the place where people will have to spend time on. But I think it's going to be hardest for the service sector a little bit. I agree.
Okay, last question. I think it's a short one. The answer can also be very short. I think some of you.
Sachin, your plug-in, plug-out moment has arrived.
All right. Is it better? I'm so sorry, guys. It's just so funny at the same time. So what is the okay, I can't hear you guys now for some reason. So let me just use this thing. Can you guys hear me? All right. So what is the minimum runway that is advised? I think, Revant, you mentioned 12 to 18 months. But the question is, in current time, what will be the minimum runway that is advised to startups? Let's see if all of you give the same number.
Get as close to January 22 as possible.
So 12 months is my view.
I think it's like 12 to 18 months in that zone. depending on how you want to do it.
Yeah, I would say 12 to 18. I think Fareed's while that's a view I've been hearing a lot. Jan 22, which is about 18 months minimum. As I said, one of the views I have is we will have to suck up valuation hits. So my 12 to 18 is with the caveat that you may have a flat round or you may actually have a down round as well. But money will be available in hopefully 12 to 18 months.
Yeah, I also do think I'm with Fareed on that one. I do think it might be 18 months, but I'm no expert, so discount my views on this.
Fareed's looking at a 3x markup, yeah. So uske liye to rukna padega na usko Jan 20.
That's not true. We are not, in the Indian scenario, I believe that all businesses are fragile. There are hardly any businesses which are anti-fragile because we are so interdependent. And unfortunately, for things like, when the logistics system goes down, when the India logistics goes down, advertising spend on FMCG goes down because the FMCG goods are not able to deliver. And then hence digital spend goes down. And hence then, the net ARPU that we can get out goes down. So everything, goes down and down and down. And we were at our peak of unemployment right now, right? So 45-year peak, I think. So for that reason, I think none of the businesses in India are in the anti-fragile movement today. Unlike China, where there were significantly large businesses which were anti-fragile to the situation.
Okay, guys, I think it was a wonderful discussion. We're probably 5 minutes over our time, and I certainly, for me, there were a lot of takeaways, from this discussion. Last, I would say everything's not doom and gloom. I like the optimism of Revant. Certainly, I have imbibed some of it today. And I think we all will come out of it very strong soon. So stay positive, stay transparent and fair, communicate. And at the end of the day, be very, very safe, right? That's my last comments. I will pass on to Pramita to sum it up from here.
Yes, thank you so much, Sachin. You're right. The insights, the optimism is something we really needed right now. I'd like to thank all of the speakers and panelists. Thank you for sharing your perspective and insights on the issue. Thank you for being so honest with us. I think that's something we really can take away a lot of insights from. Your perspective has definitely helped us deal with the COVID-19 crisis so much better. And I'd also like to thank all the attendees for joining us today. Thank you so much for your time. Right after you close this window, there'll be a pop-up with the feedback. Please let us know what you think about this, how we can get better. And if you have any suggestions for webinars, do let us know. For more webinars like this, please log into yourstory.com. Thank you so much for joining us.
Thank you.
Thank you, everyone. Cheers.
Thank you, everyone. Stay safe.
Safe. Bye.